Texas Rangers say, you know what? We're going to add to our starting rotation. Mackenzie Gore, come on down. 5 prospects, and we will inform you about what these prospects bring to the table, at least right now, in terms of their tools. We're going to get you a little clip from J.J. Cooper very soon from Baseball America. But let's start with Gore. Kratz, Rangers, adding to his strength. Pitching has not been the problem, really, for several years now. And they continue to build on what makes sense, given that their front office leader, Chris Young, was a former pitcher, won a World Series early on in his tenure running that front office, and he keeps doubling down by adding someone who has as much talent as any pitcher probably in baseball. Can he put it together for a full season? Also, he will not have to shoulder a load of being that guy. All right, it's Mackenzie Gore win day. Nationals are on a 4-game skid. Now we need Mackenzie Gore to come in. No, the Rangers have plenty of other helpers, Evaldi, DeGrom, Leiter, and many more. So he'll slide in nicely in a mid-rotation spot, right?
He will. And I think there's a lot of people, especially with pitching, people are like, oh, his, the potential that this guy can show, he just got to hit it. He did it the first half of the year. First half of the year, he was going to end the season at.
Hey, Jack. How are you? Sorry I'm late. I just had trying to keep up with everything. So I'm a little late, but we'll go from there. Let's turn this a little bit so I have a little room here. And let me sign in for prices. Well, nothing terrific. GDC's on my screen. It's up 30 cents at 4.46, so it's lost half its value roughly. That's probably wrong. It's probably lost about 40% of its value since essentially, and I'm not picking on him because he was right about Railtown, since Bill Miko essentially swapped out half of his Railtown for GDC. That's not exactly how it went, but roughly. He paid almost $8 for GDC, $7.60, $7.80, something like that, something like that. Well, Railtown, of course, is down 10 cents from 35 cents, so I guess they're both about the same downward percentage. Finger is down a penny at 120, actually 1.209. This MTEN is a penny, 0.0172. So for those of you who were lucky enough to get in it, it's $28, $24. Bear it in mind when you see Railtown down that you might have been in believing the story of MTEN. And I would call that a complete wipeout. I mean, I don't know how that recovers. I mean, if you're in it still, you might as well double, triple down and see what happens. But, and then ZJYL is in the green, half a penny at 0.1358 for whatever that's worth. So Railtown's 25 cents. I don't know who Megan Trainor is, but she gets the headline. And nothing's coming up. So let's go to a different news source. All right. I don't see any real news to talk about. I know. Thank you for pointing it out. I had an investor. I guess he just didn't really believe it when it was $25. But maybe he believes it now. I don't know. Problem with silver at 100 is it's going to be volatile. So if you're buying silver at 100, I think it goes to 150, 160, which, by the way, my prediction forever has been 120, but I've over the last many months have said 150, 160. And it, can always go out of control. And if you don't own silver, you should have some. But I think it's going to be time to shift to the miners for easy entry points. Silver is not an easy entry point right now, I don't think. You go up by 50% from here, but you have a risk of going down by 50% too. If they can maintain control of the market might go out of whack for silver, and all of a sudden it's unobtainable. But I wouldn't bet against the Fed or the plunge protection team or JP Morgan or the government. But we'll see what happens. That was a perfect hedge against the gold company. And that was my recommendation. But I don't think it's a perfect hedge anymore. Because if you can't take the volatility or the depression, even the delay in Railtown strike price, you're not going to like what happens to silver when they finally suppress it for a while. And that could be at any time. They do not want it to get out of control. So there's risk of that. Now, I'm not saying it will pull back, but the easy point, the easy part of getting into silver is long gone. Long gone. $20, $16, $25. But human psychology is, it can go lower. It's too small a market. People, I can't trust it. Now that it runs up, everybody wants to get in it, say they're in it. That's an expensive way to join the crowd. I do think now you have very similar numbers, by the way, very similar numbers. Railtown's 25 cents. Silver was $25. Silver is now 100. I think Railtown will be $1, 100 pennies. And I think it can happen with I want to say alacrity, but let me see if that's something that can just happen or if it has to be an action by a human being. And I think alacrity is more of a human being thing. Let me just see. I think Railtown will go to $1 with cheerful readiness, eagerness, and speed, including willingness, enthusiasm, promptness, zeal, swiftness, quickness, dispatch. With dispatch, I like that. I think Railtown will go to 100 pennies with great dispatch. Gloria, this is my, meet Hobson. He's my, whatever. Hi. It's a pleasure to meet you, Gloria. I see you have a wonderful economy with words. I look forward to your next syllable with great eagerness. All right. Hey, Steve. Eric Bellinger, boring week, maybe some good news, Feb 1. Tell us fourth quarter and full year earnings. Well, that's a good point. That would be a full manuscript. It would certainly be an update on management thinking. It's a very good point. That could be part. But I really think we need to break the backlog on news. And, you know, I wish I had money to buy the stock. I just don't. And I know many people are just going to be stubborn and say, oh, prove it to me. Lang Chain beat it. Technology is going to speed up and Railtown's missing out. And the people at AIP, they're really talented, but the ones that Railtown don't know what they're doing. Well, I think you miss a chance of really buying into Railtown like silver when everyone's looking at other things. And then you're going to see Tony the Turtle turn into Tony the Tiger as it goes up, and he's going to be claiming great credit for it. Be wary of it. Let him have his day. I mean, hey, he has chats with the CEO, but don't treat it like a stock you're going to trade out to and then get into his favorite stocks, AME and GMC. I mean, don't go into GameStop. Don't go into a theater chain. Although I must admit, the other night I went to a movie just because I was stressed out. And theaters are doing pretty well, I guess, again. But I mean, what are you going to do? Double your money? Make 50%? Railtown, as I showed you yesterday, and I did not enter the numbers other than the projection of 25 million in annual recurring revenue this year, 100 million next year, and 250 million in 2008. You can come up with your own targets, but where do I get those from? Just moving, say, 150 million. I don't know. Pick a number. What does over 100 million mean? When Dr. Tom Core says there's over 100 million, we're going to move from our network that they're spending right now. It's 125 companies out of the approximately 200. We're going to move that over from other hyperscalers. They're currently spending it. We're going to move it to the Thales data center. What does over 100 million mean? 101? Or could it be 120? Could it be 150? Particularly considering he's only talking about approximately 125 companies. I don't know. If you pick 150 million that they can transfer over this year, that's at 20%. We don't know that number yet, but at 20%, that's $30 million in annual recurring revenue that goes both from it comes from an expense side in the network they own, and that's still their expense, but it becomes a profit at the Railtown level. And it's 100% or as close to it as possible. So I use 25 million instead of 30, 25 million for this year we're in, just from that one source. I'm assuming nothing comes in from Thales's own clientele, as they say, in parts of the realm, the king's realm in Canada. Then next year, I assume you got the annual recurring revenue of 25 million that continues, and assume that doesn't grow. Assume from the Thales customers it's 75 million next year. So that's 100 million. And then by the time we get to 2028, I assume both grow, and I picked 250 million. These are the only numbers I entered in yesterday. The rest of it, the computer, the AI did. They searched data and came up with conclusions. I'm not saying it's correct or not, but as soon as any whiff of that story of growth comes out and the buyers can buy, this easy entry point will be gone for Railtown. Silver went from 16 to the low 20s, pulled back to 18-ish, went to the mid 20s, pulled back to the low 20s, danced around, broke 30, 31, 32, pulled back to 28. I think silver's a small market. I'm not sure about it. You know, whatever. And then went to the high 30s, pulled back to the low 30s, broke 40, 42, pulled back to the high 30s, went to the high 40s, pulled back to the low 40s, and then busted 52, pulled back a little bit. But man, once it made the new highs, it was the only asset in the world which had not made highs since 1980 in 1980 in nominal terms, not in $80, in nominal terms, not adjusted for inflation, just in nominal terms. Silver had never made a high in, I guess that's 50 years. And all of a sudden it made the nominal high. And everybody's talking about it. Even the reporter down in front of the SEC. It's on the tip of everybody's tongue. Now everybody knows it. That was the easiest entry point. Took a little courage. Had to follow the in early without confirmation. But what a reward. 5 times your money if you got in at $20. If you got in below, 6 times your money. If you got in at $25, 4 times your money. If you got in where most people probably would, you've made 3 times your money. If you had put $5 million into silver at the same time as putting $5 million into escrow to dole out as milestones come along in the gold company, imagine where you'd be. But it's not anybody's fault. It's bureaucracies take forever. Bureaucracies are mostly now, and I'm going to get in trouble, but they're mostly feminine now, and they're mostly wimps otherwise. So everything gets done in a very comfortable way and make sure everybody's happy. There's no bruising of egos and let's get it done. So everything is slow, but I'm not judging it. I'm sure it's better than the 5,000 years of history we know about. The last 20 years are perfect because we know, without any studies, we know that if we replace not only the horrible straight white male, but all the other minorities, like, for example, African American men, if we replace all of them with white women, it's all going to be better. And I'm sure it is. I am sure it is. But one of the consequences is bureaucracies, which were always slow, I think have slowed down even more. So some of missing that opportunity, all of missing that opportunity was those delays. But it's funny, we can make excuses for that, I guess, in the abstract, but when we look at Railtown, we get angry at the CEO for the delays. I don't know. I don't know. I think it would be a legitimate argument. I was pretty upset about how long it was taking to close the AIP deal, but I don't think the swift lightning judgment from on high the kind of the poker player quick decision judgment that AIP, those guys are great and Railtown's guys don't know what they're doing, is correct. Now, I do think AIP's guys are great. And there's one woman in HR, I think, or what? Maybe that was on the Railtown side. Unfortunately, they're all men, so excuse me for right now. It'll be women in the future as it gets bigger. But I think it's true. AIP's great, but I think it's equally true and even more true that Railtown not only is great, but there was genius thinking 6 years ago and courage to act. But we don't give him, I'm talking about Corey, any cutting of slack for the fact that the bureaucracies in Canada take forever. We leap to the judgment that Corey, something wrong with him, and AIP's great, but well, I think part of the reason AIP took so long, it's basically a college professor running that company. But you know what? I spent a lot of time getting frustrated about that. And as it turns out, it was a red herring, if that's the right word to call my concerns. Why? Because it didn't bring in any buying once that deal got closed. Well, that's because it's not any good, and if it were good, people would be buying anyway. Well, I know that happens in New York a lot, and maybe it happens in Canada. But Canada's a much smaller market. Canada's smaller than California when I looked it up. And California is just one state in our nation, which has national securities laws and then state securities laws and a bunch of attorneys obfuscating the rules on behalf of the criminal colluding, co-conspiring counterfeiters. So I don't know if it's different in the United States. Human beings are greedy and cheaters maybe everywhere they go, but there's a lot of honest men and women everywhere you go. So a national government in Canada doesn't have as difficult a job as a national government or regulator here in the United States does. So I'm not sure that people would break their non-competes or their standstill agreements or their confidentiality agreements that they've signed as they look at data given to them by AIP and Railtown regarding the merger, regarding TELUS, regarding future revenues, regarding the secret sauce, whatever it is. I'm not sure that there would be that much cheating. But, I mean, it's an argument. It hasn't shown up that anyone's been willing to buy and risk going to jail, risk their directorships, risk their clean record, risk their franchise to manage money. It hasn't shown up yet. So maybe it's a valid, there's no way to know if that's a valid concern yet. I guess there's no way to disprove it either. I don't choose to believe that the fact that a large group of men and women are unwilling to break the law to buy Railtown, I don't see that as a negative about the story, but some people do. Some people do. People will bend into pretzels to make sure that their belief that the stock price is telling them something is correct. My argument is, and maybe I'm swinging from the bars and jumping on trampolines myself. But I believe that the price is wrong. And it's been manipulated downward by the great heaviness. Tony the Turtle Tiger, he says in his write-ups about the movie theater or the failing bricks and mortar game console companies that he loves or focuses on, he says, oh my gosh, look how much they sold in December. They've really walked down that price. But when he looks at Railtown, he doesn't see the price being walked down. He says, my due diligence has finally been rewarded. He ridiculed me for a month coming on, and he misrepresented things I said. When I came on with Railtown, he didn't do any due diligence. He pointed out to you that there was a going concern clause. You don't think there's going concern clauses at the movie theater? The only reason maybe that GameStop may not have it anymore is that the washing machine pulled money from you over and over and over again as you fell for the hype. Good on Cohen. You can look at him, and I think you can see he's part of it, or he's such a doofus. He's an innocent, hapless part of it. It's all my opinion. But they got the per share cash on the books up from $2 a share in GameStop to $19 a share. It's a hell of a thing. Stripping money from you. And Tony's a big part of that. I don't care what you say. He's either dumb, which I think is a pretty good conclusion, or he's part of it. How much have you made in GameStop following him? Or the theater company? Don't let him, please don't let him, when the stock of Railtown goes up, please don't let him, he's going to peacock and crow and parade around, and he's going to try to take you to his audience, which, whatever. I don't. Actually, right now, this is all I can do, I guess, but this is not the only thing I've done in life or anything, and I'm hopeful I'll get back in the game where I was, but who knows? Most of my contacts are older, and life goes on. But this is kind of all he can do, I guess. So I don't begrudge him. What I do begrudge is if he confuses you and makes you think that Railtown is just a trade, and then you can come back to one of his 3 other stocks, 2 of which are just meme stocks that they've squeezed all the money they can back. They might have been hurt briefly during the pandemic, but they've made all of it back and more. And this crap story, GameStop, they've increased the per share cash essentially by 10x. But how has it helped you? I see how it helps Cohen. I see how it helps the shorts, so-called shorts, get out of their trouble. But how does it help you? Please don't let him take the glory, if it comes, onto himself and then get you to shift over to his other marshmallow puff stories. Don't do it. But that's what, I'm sure it'll happen. He misrepresents me, but he also misrepresents himself. He paid 48 cents for Railtown. How does he get to clothe himself in garlands and say that he was right? I don't get it. I don't get it. I really don't get it. But most of you will believe anything if it comes on Twitter, or if it comes from a gravelly cigar voice soaked in whiskey and beer and late nights coming on. Yeah, we're in it. My big guys are in this company. We're all in it. Yeah, my guys are have accumulated. It's all. It's all. You got to stop listening to it. But then, I think there are those, maybe one in particular, that thinks my thinking is all caught up in I don't know, what do you call it, rose-colored glasses thinking. Well, I guess the story hasn't been written, but I think with Railtown, the idea of technological obsolescence, it's just not true. I do think, and I've raised money for companies where if a CEO takes too long to monetize his team's IP and story, I've told you the one, a complete Facebook analog missed the whole boat, and years ahead of Facebook, missed the whole boat. Corey himself talks about how they started a Dropbox analog, but there was an iPhone. There weren't iPhones and iPads and Samsungs and app stores, so it didn't gain traction because it wasn't a Microsoft product. I've seen it, but I don't think Railtown is in that position. Yes, it's unfortunate that AIP took so long, but it doesn't seem to be what was holding up the works. It seems to be this TELUS deal is holding up the works, and it might be also Railtown's problem. And you, of course, you can make all sorts of excuses for regulators and lawyer attorneys, and call me a jerk for pointing out the changes this generation of young people have to deal with. But I'm not trying to run a kumbaya meeting. I'm trying to see what are the factors that are affecting making money or risking money. What are those factors? And I was wrong. I've been wrong on a couple things with Railtown. I thought it was urgent. I thought some of the guidance and information I was getting meant something. It obviously didn't. And then when I couldn't talk to certain people, I'm blamed for flying blind. And then Tony, the two-tone turtle, the striped turtle, can I don't get it. I don't get the whole dynamic. And I do surely wish that Railtown had done some things by now so that you guys weren't only listening to me, and everyone would be talking about it just like they're now talking about silver. But unfortunately, it's not the case. And I've tried to examine Railtown from every which way but Tuesday. And I can't come up with a reason to believe that someone like you makes it harder to live without wanting someone else. Someone like you makes it harder to give, never thinking of myself. Someone like you makes it hard to live without somebody else. I know those aren't the lyrics, but that's how I used to sing it. What are the risks in Railtown right now? What were the risks in silver at 20 bucks, 25 bucks? That was going to go to 10 bucks, 15 bucks? It did. It went down to 16. But what's the real risk in silver at that point? Oh, it's a manipulated market. It's too small. Don't want to get involved. That's just reasoning to. I used to work with someone who I fell in love with. She was wonderful. She, like all of my great loves, they were all smart women, really smart women. They all married someone else, but she would pick. So funny. I asked her, well, how do you pick which CDs or bonds you're pitching to? She said, well, I just take the daily list of what we work together at Merrill Lynch, what Merrill offers, and I just go by what they rate. I said, oh, well, you just do the AAA bonds or the insured bonds? Oh, no, I don't do it that way. I go down the side where the credit is. And so if they're offering 4 points or 5 points to the broker to sell that bond, then I do that one. And then I pick it that way, and then I come up with the reasons for it later. Oh, okay. I always did it the other way around. I was looking at each bond offering, like the whoops bonds I didn't like. But I would try to pick a municipality or a state that had good economics, or a bond that had a good yield, or a CD. But I got her point. I mean, if you got 4 points or 5 points, even 6 points sometimes, if it was a special in a bond or a CD, that was a huge payday. A huge payday. But she would pick it and then come up with the reason. That's what I think happens. Oh, silver's 20, 16. Come up with a reason that justifies it, because you just don't want to get involved in going against the crowd. Well, that's kind of where you are in Railtown right now. You really have to struggle to come up with reasons not to buy Railtown right now. Really have to struggle. But the obvious one is that the market's telling you something's wrong. That's the obvious one. I don't buy it. I don't buy it. And when I was asked, I think twice, when are you going to give up on Railtown? I don't think my non-joining in and giving up did very much for my credibility. And I don't know, when do you give up on Railtown? I would say I would give up on Railtown if when TELUS really opens up the valves at the data center and they find out that Railtown software doesn't work. That would be a signal to give up. You can't, I don't think you can have it both ways. You can't praise the minds and the men, they're all men, at AIP Partners, praise them. Oh, they're great. But then ignore their conclusion out of 170 companies that they curated into their network, only one that we know of did they go to and say, why don't you buy us? And only one did they say, we can make your technology the platform that everybody in our network uses. Only one did they say, we can use your technology to help all of our companies and Railtown to cross-sell across 200 companies now, approximately. There's only one company that they chose. So you can't both praise Caesar and bury him. If you're praising him, well, then you got to praise his judgment when he said Railtown's product is great and we want him to buy us. So I personally think there is a key third-party endorsement of Railtown's technology in the form of the AIP partners. John Ruffalo, Dr. Tom Core, I think the gentleman from IBM is Gallagher, lifelong IBM AI software guy, and Mike Norbrega, who was the CEO of Omers for a decade. No, and Mike Norbrega and John Ruffalo were the foundational investors when Constellation Software went public for $25 million. 25 million grew to 100 billion. They stopped issuing shares, so the shares went from under $10, maybe under $1, to $5,000. And AIP Partners is a mimic of Constellation Software's SaaS roll-up strategy: acquire and consolidate. Acquire at a discount, efficiently spread knowledge and cut costs in software, get efficiencies of scale, and have booming cash flows, and therefore high multiples. Those guys chose Railtown for Railtown's technology. I think it's a powerful endorsement of something that we may or may not fully understand. And then we've seen that TELUS chose Railtown, although one of the press releases says, quotes the TELUS guy, Ali, I'm going to mess up his name, the COO, I think. He said, it's great that Railtown chose us. So who really, fell in love with the other first, we don't know. But we have evidence from TELUS that Railtown's joined forces with TELUS on the single sovereign AI fortress data center in Canada that's ready to go. Now, that won't last forever. That's probably last 6 months, 9 months. But We've seen TELUS also say they're going to grow their revenues, which I interpret it's going to be based on those data centers to 2 billion. But I only use 1 billion in my numbers. You can cut it further if you want, because I don't know. None of us know exactly how it's going to factor out. But not only did the AIP brain trust kind of say wow to the technology at Railtown, TELUS confirms that Railtown's technology is exactly what they need at their data center. So I don't buy that the TELUS software is somehow obsolete or going to blow up when they put pressure on it. However, I do think it explains the delays since the AIP deal closed. But remember, it's also the holidays. I'm not allowed to point out that Canadians view holidays differently than Americans, although Americans in the financial world view holidays the exact same way. Take the whole bloody month of December if you can, and most of January. Most of the portfolios and bonuses are settled up end of November. So there's some reason for this waiting. But to conclude that there's something wrong with Railtown, I personally think is a stretch. Am I right? I have no idea. But you got to go with your probabilities. There's other ways of making money other than the TELUS clientele and the AIP network clientele, like Uniserve and some others. But for simplicity, I've just blocked all that out, given it a 0. There's nothing exclusive about their deal with TELUS, and maybe that goes both ways. We'll find out. But that means there's Bell Canada. That means there's Rogers Communications. That means there's Microsoft in Canada. So, yes, that argument that Langchain blitzed to the lead and therefore somehow Railtown missed their chance. It's certainly the only thing in the news right now is Langchain and some of the other minor competitors. And so it's hard to refute that line of thought. But I think when you combine the concern that Railtown, to phrase it a different way, Railtown has to come through with flying colors, just like NVIDIA and HPE and the whole data center stack when TELUS really opens the well for production. Well, it kind of explains maybe why things have taken a while, because maybe they're making sure that bloody rail engine, which I think is a massive differentiator versus Langchain, for now anyway. It makes sense. Maybe they're testing that first, or dry running it, or just making sure it's all hooked up perfectly. It's what any of us would do. So anyway, we've had to wait through December and through January, completely logical from a holiday standpoint. We've had to wait through perhaps this trial run period of time. We'll find out. And we've just had to wait through bureaucracy and slow pokey decision making. All predictable. None of it reflects, in my judgment, on the IP, the head start, and the technology that these two guys and their team at Railtown started 6 years ago. We'll find out. I mean, just because I believe it doesn't, obviously doesn't mean I'm right. But that's how I view the risk of technology from Langchain or somebody else eclipsing Railtown. I don't think it's happened. Secondly, what's the size of the addressable market? I'll let you Google it or search for it. But I showed you a week ago, in all manner of measures, it always came out around 30 billion. I mean, there's much bigger numbers out there. But if we use 30 billion as the addressable market for these sort of orchestration frameworks, these agentic generative AI, these ADKs, this layer where conductor, rail engine, and rail tracks lays? Or does it lie? Lays. You lay the table, you lie down. I never get it right, but I think it's where it lays. Well, that addressable market, if you take 30 billion, which I think is very small, and you say that Railtown gets 1% of it. I don't know. That seems very low. There's two competitors that we're aware of Langchain. We're aware of Google ADK. And then there's a bunch of these little things. Facebook bought a tiny one, and there's some other tiny ones. So if you look at the market at 30 billion in revenue that's addressable every year, and you assume there's 30 competitors that get an equal share, all, combined, but when you divide it up, in other words, there's 30 competitors, including Railtown. So 29 of those competitors collectively get 29 billion of that annual revenue, and Railtown just gets, 30 billion. Railtown just gets, I guess that would be, I'm getting confused. 1 billion of 3 billion is not 1%. Of 30 billion. It's 3%. So if you assume Railtown gets 3.3% of the addressable market, we only know two other competitors right now, Langchain and Google ADK, which stays in their own column. There, like I say, there's a bunch of these other minnows out there. Maybe one of them gets traction. So if we assume that 29 billion out of the 30 billion goes elsewhere, Railtown gets 3.3% of that addressable market. over the next 2 or 3 years, that's $1 billion a year. Maybe that sounds too high to you. I would argue that's why Microsoft or Oracle or one of these other IBMs want to buy them, because they're going to want to go capture as much of that $30 billion a year and growing market as they can. But if you want to take it smaller, down to 1%, then maybe you are focused on Railtown doing $330 billion in revenue every year, annual recurring revenue at 100% payout. That's more than I put in my query. It's pretty powerful. Then you're assuming that all the other competitors take 99% of the market and Railtown's left with 1%. $333 million a year is well over $1 a share in revenue, profit, cash flow. So my second point is the addressable market dwarfs all the concerns, in my judgment, that somehow the delays, which weren't the professorial Dr. Tom Core's fault, they're just somehow the Keystone cops over at Railtown's fault, which I don't agree with, by the way, that the delay has exposed us to this risk of not getting our technology out there on time. I think the price today has more than priced that risk in, and I just showed you why. I think the addressable market is massive. I think the addressable market, that's just for this orchestration layer type thing, that they're just starting to come up with names of what to call all this. But I think the other market that people miss out on, which is, when you think about it, it's almost uncalculable, but it's truly large. Railtown, look, I give great credit to Langchain. They went out with Sequoia and the rest, and they've done a great marketing blitz. They've put their idea out there first. They've raised a lot of money to backfill their abilities to match their idea, and that's great. And they've educated people on the need. But they still have a model where customers have to sign up one customer at a time, which is what's going to happen at Railtown. Except Railtown's getting on top of this huge funnel, this huge data, this gigantic data tube of people choosing, and companies, entities choosing the TELUS data center. And as they come on board, and I don't know how many enterprises TELUS has, they have something like 20 million hookups, and I'm not talking about swiping left or swiping right. I'm talking about internet connections. How many of those are their enterprises? I don't know. Only the CEO has that data, but he was confident enough to predict that $2 billion would come from this AI-enabled sources by 2028. I believe that's the data center. What else the heck could it be? the stack. Well, if Railtown proves its concept on top of the TELUS data center, one data center, maybe two, they're not proving it company by company, although the decision making inside of the flow to the data center is basically that. But they're in front of this just huge client flow coming to the data center for cheap costs, for NVIDIA, efficiency, because it's Canada, because it's green. They're just flooding there. And Railtown's just gobbling them all up. Now, we don't know the exact ratios, which is why I took half of 2 billion, took $1 billion. But that's not obvious to the world yet. You know about it because you've put 2 and 2 together. Once it becomes obvious, my contention is Railtown's going to be valued at Lang Chain numbers, which we don't know where those are now. Those could be 2 or 3 billion in enterprise value right now. So that market, if you choose to think about it, is a proof of concept that opens the upside for Railtown to such enormity that it's almost scary to think about. There's a lot of data centers in the world. There's a lot of sovereignty in the world. And there's trillions and trillions with a T of dollars going to build these giant computers. And if Railtown becomes that layer, whew, that's a big deal. The other risk, of course, with all these so-called junior companies is if the company does the toxic financing. I don't see that. And I'm not going to spend time on it. We've talked about it before. I suppose there could be further delays, and that everything's risk when there's delays. And I guess that brings up the overall issue of a stock market crash or the capital markets collapsing. The window shuts overnight. That's always a risk. But that's risk in everything. And I doubt such august companies like MTEN or ZJYL or even GDC or GBucks or CRTD or fill in the blank. It's got a large short position and the whales own the majority of the float, and it's in AI, it's in gold, it's in healthcare, it's in your mama's knickers, and it's going to go up. None of those are going to do too well if the capital markets come collapsing down. But time, that's an exposure of time and that's unknowable and undefinable. What else is a risk at Railtown? I mean, the stock's priced as if it's going out of business. Silver was priced as if silver was worth as much as throwing it away, basically, an afterthought. Railtown's priced as if it's going to go out of business. So it's the easy entry point. But people aren't going to believe me until it starts going up. I just don't see other risks than what I just listed, and I don't find any of them crippling right now. What would make me give up is if the data center somehow blew a fuse, or if Railtown didn't meet that opening test, which is why I'm willing to suggest to you that we should give them as long as they need to make sure it's going to work. And I'm sure it already is going to work. But we should allow them that month or whatever they're taking. I don't think Lane Chain is going to leap in front. Number one, in Canada, Lane Chain has no advantages. It's Palo Alto. So I don't see that. But I guess if TELUS announced that they fired Railtown and they were going to go with someone else, that would be a reason to give up on the story. If the company took a toxic financing from Canaccord Genuity and increased its outstanding shares to over 1 billion, and then you couldn't calculate what the future denominator was with any reasonable accuracy, that'd be a reason to give up on it. If governments around the world decided that AI is bad and we need to go back to an analog society of the 70s or the 60s, that certainly wouldn't be good, but that wouldn't be good for any of these companies. If the market crashed, I think there'd be a temporary difficulty for all AI stocks, but I do think after about 9 months to a year and a half, government and central bank efforts will cause the markets to recover. Not going to previous highs, but there'll be new leadership. And I think it'll be the commodities sector in general, the industrial sector, but it's also going to be AI. So we'll just have to deal with that. I don't think we're close to that. So that's my thinking on the risk side. But what could happen on the positive side with Railtown? Number one, if it ever crosses 70 cents, just like when silver crossed $52.50, everybody's going to be talking about Railtown. If Railtown crosses $1, everybody's going to be talking about Railtown. And they won't know the story that well. So that could happen. That could surprise everybody. If TELUS and Railtown announce enough information that the Paul that's brought over the market price of Railtown by the fact that there's material non-public information which hasn't been made public yet. If that happens, you could start to see the stock trading upward, and as it crosses certain thresholds, accelerate like silver has. Think about it. Silver went from $20, $25. It took a long time to get to 50, backing and forth and backing and forth. But it went from 50, it went that next $50 in a heartbeat. So I think that'll be ahead. Finger closed down. I don't know. We'll go through the prices. Research is going to surprise you to the upside, but it seems to be waiting on some sort of material disclosure. Buying's going to surprise you once that material disclosure is out. All you need is one or two institutions trying to gobble up just 4.9% of the stock, and you're going to see a whole different story in the price. But as the gentleman earlier pointed out, what if TELUS, oh, here it is, Eric. What if TELUS starts talking about the success of their data center? What if Microsoft starts seeing the revenues? Because however you want to describe it, the Railtown revenues are embedded in 3 of the Microsoft channels, or if you want to say it the other way around, but it's going to start showing up on revenue runs and production runs. What if to me, a company that would want to buy into it is Constellation Software, because they're hitting real headwinds now. So what if Mavericks 2 wants to buy in? What if Omer's Ventures wants to buy in? And what if Constellation Software wants to buy in? And you've got 3 companies who know the story, who obviously are insiders, so they can't buy now. But once they are able to buy, what if they each want to buy 4.9% of the company? And they're not going to care about the price, at least down in these ranges. Probably not going to care below $10. It changes everything. So the entry point on Railtown is sitting there to be grabbed, just like silver was sitting there forever. And now people are looking at over $100 for silver, and they can't even fathom being able to buy it at $25. But they had a year and a half, 2 years, and prior to that, they had a decade. Prior to that, they had 25 years to do it. But now it's gone. $25 silver is over. And I suggest to you 25-cent Railtown will be over with just the same kind of price action. 25 cents will go to 100 cents. And then all people will be talking about is the upside. So anyway, I think I covered all my points. I do have a couple things to show you, but not much. Let me get what your comments are. Let's get the prices first. Well, let me give it a second to adjust. GDC actually went higher to $4.50 a share. Railtown closed under 25 cents at $24.95. Finger $1.18. MTEN is showing something at a penny. 0.0167, 0.0166. ZJYL is 0.144. So I don't know what to tell you about all those other stories. But I do think that your closest analog to follow for Railtown is silver. Same numbers, 25 to 100. Matthew Kolar, have you heard of Prismo Metals? I like Vizsla Silver, 10 cents. I'll look it up. Yeah, we're going to have to look. We're going to have to look at the mining shares. What's going on with the miners? And I'm not immersed in it. I don't have any I thought I did for a while, but I don't really have buying power behind me anymore. So I've got to do the phone calls and collect the information, um, just like anyone else, which is fine. I've done it that way most of my so-called career. 15% ownership, 10 cents. Okay, I'll look it up, Matthew. What's happening with the metals now is the big companies, if you want to call them blue chip, they've all gone to pretty well valued. But some institutions, that's all they're going to buy. And then you come down the waterfall, if you want to call it that, you come down to the secondary companies, and those are maybe the smaller, mid-sized producing companies. And those are getting a lot of interest and price increase. And then it'll come down to the, you can call them juniors, but it'll come down to the mid cap and smaller cap producing companies. And those will get some value. And then it'll go down to the smaller companies, whatever size, who have this nebulous idea of proven reserves and infrastructure, and everything's kind of ready to go, and they're within 6 months, a couple of years of production. It'll come down to that. And then it'll go to these smaller companies who do not have production yet and may need some investment. And then it goes to the moose pasture companies. And I think what's going on now is everybody's talking mining now. And it's so predictable. But I couldn't get anybody in early. The easy money is to get in when people aren't talking about it. Now everyone's a genius. Every bloody person's a genius. And that'll be the next stock you hear of. The next time you hear of GDC, it'll be in AI, it'll be in crypto as a treasury stock. It'll have biopharmacy in its name, and it'll be buying a gold mine somewhere, but it'll have silver. They'll have a silver mine or a silver company. It's all the buzzwords. So I think some of these companies that are not yet producing, there's still an opportunity down at the lower levels. I don't think that waterfall has come all the way down. I think the interest is still up at the larger producing properties and mid-sized producing stories. But that's going to change quickly as private equity gathers momentum, as the restrictions, the covenants in the stock deals, the equity deals that private equity gave to the bigger companies, because everything in this space was stressed. As the cash flows start growing beyond the cash restrictions, you're going to see money being spent on buyouts and consolidation. And that little company that you guys have invested in, it'll be bought out, but not first. So there's still some time for us to maybe make something happen there. And that's one of my goals. As the winter storm comes in, I want to attack that investment we've made with a strategy, because I believe, I don't know for sure, but I believe the large investor has disappeared. It may be just that he has no confidence in me, and he may still have a desire to play in that. So we'll see. But I don't know the answer, actually. I don't want to speak for it. But I think it's pretty clear after about 6 weeks of silence that I've been dismissed. So, but there's an opportunity for us, I think. We'll see. We'll see. Hey, Pat M. Hola. E. Belanger. Yesterday, I listened again to the interview with Dr. Tom Core. Good for you. I was going to do that, but I've had a bunch of things to do. But good for you. That's how you should do it. You should listen more than once. Try to be critical. Maybe each time you listen, take a new sheet and write notes down. Compare your notes. It's very good that you did that. And I'm wondering, AIP accepted to be bought in 50 million shares at 50 cents. That's true. But I think, now you're going to get me, but I think that 50 cents was Canadian. So it's debatable whether it was a $20 million deal or a $25 million deal. And then it's debatable whether they're going to issue all of those 50 million shares. So anyway, whatever. It's either 20 million or 25 million. I've personally stopped trying to make the distinction between Canadian dollars or US dollars. There's a 25% fudge factor in any dollar number that we use. And I just don't think, with the stock price so low, that it's really worth getting into that back and forth for now. Later on, it'll matter whether you're talking Canadian or US. But right now, I don't think it matters. But anyway, let me see what the rest of your question is. E. Belanger, do you really think AIP would have accepted this deal if Railtown didn't have what it takes under the hood? Exactly. Exactly. I do not believe they would have. Because here, somebody said it here. I haven't, when I talked to Corey, it wasn't my impression. But frankly, I didn't hear one way or the other. But somebody here said that it was AIP's connection. The principals had the connection with TELUS, which is possible. This guy, John Ruffalo, amazing networking guy. But same with Mike Nobrega, Dr. Tom Core, the IBM guy, amazing. Canada's not as big as the United States. So you can be a pretty big player in on the national level. So anyway, I agree with you. Why would these guys hitch their wagon to Railtown if they hadn't done their due diligence? And by the way, they had a long time to do their due diligence. They met at that conference, I believe it was British Columbia is the best province for AI in the world, or conference or something. BC in AI After Dark, or whatever the hell it was called. I think that was October. I think that's 15 months ago. So they've had plenty of time to do their due diligence, and they certainly did the really slow walk of finalizing the deal. So I agree with you, Eric. I think they closed the deal because Railtown has the bee's knees. And I re-emphasize, I believe Railtown is better than Langchain. But there's room for Langchain, Railtown. I just showed you a way there could be room for 30 different companies at 1 billion each in annual revenues. And that would make a sweetheart of a deal out of Railtown. I mean, I do caution, and that's why I'm starting to think, darn it, I'm starting to think there's a risk that, for example, a Microsoft buyout would come in the $15 range, give or take $5. I hope not. I really hope not. Or a Google buyout or a Apple buyout. And then that growth of tens and $20 billion of equity happens inside the umbrella of a much bigger company. I hope that doesn't happen. I hope we get at least 10 or $15 billion worth of the forward projectable revenues in a bidding war, because then you are talking $50-$60 a share in an acquirer's stock. But I think we have to be aware that that growth could happen inside of a much bigger company. Yeah, but anyway, we got to be happy with. Luckily, I do not think it's going to matter what decisions management makes at some point, because I think there'll be a bidding war, and then the market will resolve itself. The Winged Wolf. Love the quote from Arthur. What a great film. This is a robe. Put it on. This is not an invitation, Gloria. That happened afterward, but when Arthur is inviting her to his whatever, yes, Gloria. Oh, the first one wasn't Gloria, it was the prostitute. He said, "Yes, Gloria, thrilled to meet you. Normally one would have to go to a bowling alley to meet someone of your stature." And when he invites her, he says to her, "Yes, Gloria, steal something casual." Marty Party agree between AIP and TELUS. Seeing what Railtown has is all the confirmation one needs. Donna says, "Quit trashing women." Well, I don't trash women, but I think that when institutions become feminized, their leadership and their values change. And if you don't agree with me, I don't know, you're just having hurt feelings. But I think when women run institutions, frankly, I think they're more intolerant. But I think, and there's studies out there, it's not me, there's studies out there that, as in general, women are far more, and it's good, these are good qualities, it's just different qualities. They're far more attuned to seeking compromise and making sure that everyone's included, and that things are pleasant for everyone. They don't want the conflict sometimes that's caused by the pursuit of whatever the word is, justice or truth. When you ask men in general, men will say that they value truth overall, coming to the truth, which means respecting someone that you don't like. If they have the truth, you come to the truth. When you ask women, the answer in general is it's complicated. So if you're telling me that institutions run by women are the same as institutions run by men, I don't think that's accurate. And if you're telling me I shouldn't see that there are risks or rewards ahead for society or for financial markets in institutions being mostly feminized as opposed to masculine, I don't think I don't think that's the way you should look at it either. For my lifetime, all of my lifetime, every bit of my lifetime, women have always had, and I'm talking in an educational, professional world. I'm not talking about working class or although I'm much more comfortable with the working class than I am with a lot of what I've hung out with. But women have always, in my experience, been given that extra help because we've spent 50 years making sure women have equality. And that's fine. That's a policy decision. I'm not trying to trash women, but it has consequences. And I'll tell you what, whenever you notice that, usually women get upset. You're trashing. I'm not. I'm not trashing. But I mean, there are tremendously successful women, and there are things women have done in history and today that are amazing. And the smartest person I know is a woman, and I just I don't accept that I'm bashing them. But if you want to say that when things are run by women, it's the same as is when it's run by men, I don't know. I don't know if I agree with you. If you want to say when women run things, it's better, well, that's a subjective thing, I suppose. I would say there's probably many things that are run much better by women than by men. But I would say institutions of higher learning, journalism, possibly legislatures, and movies, books that are now published, things like that might suffer a bit if the goal shifts from trying to find the truth or the facts, however prickly that process is, and it shifts to being woke and being fair and making sure not that everyone has equality of chance, but everyone has equity of outcome. Well, I'm going to debate you whether that is good for society. if you think I'm trashing women when I notice that we're about to have a population collapse because primarily Western women, but now with the internet, it's spreading elsewhere. Women are pursuing a strategy that they can have it all. I lived through that. I think you did too, but you're not accepting it maybe. But I dated women and competed against women and lost jobs to women all my life. And the idea that women could have it all, the education, the career, and motherhood and happy life. Maybe some people have succeeded at that, but I've noticed in my lifetime that in a lot of the jobs, the careers I had one career, but I noticed that women would come in, and not every woman, by the way, a lot of women stayed and are very successful, and not every man stayed either. So there's no one size fits all. But there was a mandate to hire women, otherwise you get sued. And so there was quite a few that took the seats that otherwise would have gone to men, which is fine. That's fine. But those men had to go do something else. But then just a year later, 2 years later, 3 years later, many women would opt out. They didn't like the job. They didn't want to do the job. But it's true, some men did too. But what's weird is those, and I've had, I'm not making it up. I have a very good friend who I helped her get her job. And she always credits me with that, with the advice I gave her. And the time and the steadfastness I put in her, I helped her get her career off the ground. But as she succeeded, which was great, and I think she was great at it, she didn't want to date men that didn't make as much money as she did. So if you, as a society, the question is, are there all those jobs that can make that much money or not? I don't know. I guess the assumption is there are. There's just an endless amount of jobs that are going to make a huge amount of money. And maybe AI is going to create that. But I would tell her, you're making the money. Why don't you love this guy? Why don't you stick with him? You're making the money. He doesn't have to make it. But we haven't changed the roles in society. And I don't know if we ever will. But if you don't notice it, that's not bashing. I mean, noticing it isn't bashing women. It's just very confused out there. I don't know if bureaucracies have slowed down as they've become much more feminine or not. It's my suspicion, but you'd have to do a study. My experience with bureaucracies over the last 2 or 3 years if that's a working theory, it hasn't been disproven, but it could be other reasons. Maybe people younger just don't work as hard. Maybe men in my father's generation worked harder than men now. I don't know. There could be other reasons. There could be other reasons. But I'm not trying to bash women. I am trying to say that there have been changes. And I just think you're wrong. But we can, I guess, disagree. I think it's wrong to assume that organizations run by a majority of women are the same as organizations run by a majority of men. I think there's real consequences. And I think as a society, when women are told by their grandmothers and their mothers they can have it all, what we've got now, I'm not talking about your generation or my generation, and maybe it's always been thus, it's just more open now. But we've got now, however you want to describe it, and I don't like it. I don't join those things. We've got a hookup culture where the numbers are staggering that go on in that world. And it tends to be, anyway, I don't want to talk about all that because that's for a younger generation. You got to live in your own generation. But the result of it is our population is declining. In Europe, here, it's happening in China, but they mandated it, and that was men mandating that. And that was families choosing choosing sons over daughters, which is horrible. But there's going to be a population collapse. And does that just happen? Oh, it just happened. No, I think it's because we've changed the role for women, which is fine. I have no problem. We haven't really changed the role for men, which I don't agree with. I think men should have, I don't know if it'll ever happen, because I don't think, like I just in the example I gave, I don't think girlfriends or parents would ever be pleased with a man saying, oh, I used to have a job, but now I just work at home. We haven't made that switch, and maybe robots will fix that for us. Maybe that's what's coming. But when women now have fewer than 2 children, and maybe less than that, maybe 1 on average, we're going to have a population crash. And that is a decision made by society that it's more important to have whatever this is called, equality. I think it's more equity of outcomes. We're in the 2000s and 50s, we're going to face a collapse in population, and it takes a long time, if ever, to recover from that. Is that good? Maybe it is good. Good for the planet, good for animals, good for climate. But if you don't acknowledge where it's coming from, how do you understand it? That's not bashing women. Men are doing it too. Men aren't having children. But there's the rub. Men can't have children. Men can't have children. So it really is a decision by women. And that's not bashing women. It's not bashing women. I think women work extremely hard and efficiently. But I don't know how you explain bureaucracies. I don't know how you explain governments that do everything slowly. I don't know. I don't know what the answer is. I do find it surprising, as I've mentioned more than once, that somehow white women get like this blanket absolving of whatever wrongs that white men have done through history, and that white women are victims, when I don't see that as possible. I think if white men caused the institution of slavery, white women were standing right by those white men. So I get confused with that. But white men were the cause of keeping women down throughout history. I'm not totally convinced of that, Donna. I'm really not. I don't see men keeping women down. I've never seen men keeping women down. I think men have gone out of their way to make sure that women have safe places to work and safe environments and all that. So I don't buy the whole argument that I used to buy. I don't think it fits the whole what's called feminist argument. I don't find myself, I used to go along with it, but I'm not a big fan of it. I am all for equality and equal opportunity, and I don't think there should be any discrimination. There certainly shouldn't be any physical or other abuse of anybody, but particularly women. I don't think so. But I don't trash women. I do think that the current setup where women are always victims and white straight men in particular are always the dominant awful force, I think it's totally wrong. I trash that setup. I disagree with it. And you're not going to get me to agree that white men are the problem. I happen to have a background that's Irish. Look up how the Irish were treated. I have a background that's Italian. Look up how the Italians were treated. When you get right down to it, it was a certain group of white men. But, on the other hand, I think what white men did was horrible. But I don't know. I don't like simplistic answers. And, I'm trying to offer this advice and the chance to make money to women and men. I'm not trying to trash women at all. But thank you very much. There's a lot of trashing of men that's gone on my whole life that no one fights back about. And I just don't buy it. But that's me. Oh, I thought there was a big update. There's nothing. But Donna, I'll just I'll take your advice. I'll go along. I'll go along. It's a great system we've set up, and it's going to work. And I'll just go along with that. I don't care to trash women, so it's not something I have to analyze. In terms of delays, it's something that I saw, but maybe it was all men. I don't know. It doesn't matter to me. I think the world's better, obviously, for these generations. But I wonder if the world's going to be better when the populations collapse. I don't know. It could be. Like I say, it could be better for animals. So everything changes. Everything changes. And I certainly don't think I mean, it's hard to argue that women haven't leveled up. They're ahead, and the judiciary is about to turn all female. The Supreme Court, one more nominee. People going to school, lawyers, doctors. I've just seen about 5 different doctors. 3 of them were women. It's, things have changed. So it's hard for me to believe that men are such dominant, horrible influences in the world. And, I haven't used Gillette products since they talked about toxic masculinity. I haven't bought a single thing from Gillette since. No one talks about other issues with other situations. I don't have to do it, but let's leave it out of the discussion. Joe Marty, we have to get the gold company funded. Newmont and Barrick have all the currency in stock now. Yeah, exactly, Joe Marty. I've actually been working on it. But let me give you 3 numbers, just off the top of my head, which the 2 companies you just mentioned, Newmont and Barrick, they jointly own the Gold Strike project in Nevada, which is invisible gold, nano gold, ghost gold. And the discovery of that gold took a little while. It was a theory. And the white-haired guys at Newmont didn't really want to do it. But my understanding is this guy, Dr. Bill Gill, who I think I knew of from oil and gas, he worked there or was a consultant. And this is a long time ago. This is in the 60s. And somehow, even though somebody said, no, we don't want to do it, he worked out the budget so they kept going. And they were able to prove that they could process this sand in Nevada. And then the white-haired guys were taking credit for it. Well, anyway, it ended up being called the Carlin Trend. And this, I forget all the amount of gold that's already been produced and et cetera. But that discovery made Nevada our nation's largest producer of gold. And it put Newmont mining on the map. And I don't know where it falls now in Barrick Gold's portfolio of gold, and I did see in a article that Kazakhstan has this, or is it Kyrgyzstan? I can't remember, one of those. Kyrgyzstan, I think, has this gigantic gold discovery. But it'll take years to come on, but it's huge. But that gold strike, although with high prices, they'll expand it. I showed you the other day, they're down to like around 30 million ounces of gold left to produce. Well, what's interesting about the company you're in, Joe, Marty, and I'm in, of course, is this part of Nevada, it's just as big. Well, I think it's I'm probably exaggerating if I say it's just as big as the Carlin Trend. But it's possible that this play is over 200 million ounces of gold. So I would say it's in the range of what's already been produced by both Barrick and Newmont and what's left. Although their play could get to be much bigger. But anyway, ignoring all of that upside, currently the proven part is 6.6 million ounces of gold. And gold's down slightly, but wherever gold is right now, whether it's 4,600, 4,800, 5,000, just write off, 1,600, 1,800, $2,000 as the cost of processing the gold, even though my understanding of the cost per ounce in your project, my project, it's much closer to $400 an ounce than it is to $1,200 or $1,400. But using this proven amount, using sort of a methodology, assuming a methodology like the one at the Carlin Trend, at Gold Strike, take that off. So you assume 3,000 per ounce in profit on 6,600,000 ounces of gold. Well, Joe, Marty, that's just a huge number. 3,000 per ounce in profit times 6,600,000. It's $19.8 billion. It's $20 billion right here. $20 billion. And so you're exactly right. That's something that Newmont and Barrick would love to have. I don't think it's the first thing they're going to look at, but I think they would, like you say, with stock, they could buy it and put it on their inventory, and then their 27 million ounces of gold at Gold Strike is expanded to be 35 million ounces of gold under this scenario. And investors, pension plans, alternative investors are going to say, wow, that's great. They have this I didn't study, but they have another 20 years of production. I don't know what their rate of production is. I'd have to ask that. But whatever. The theory is their reserves have a longer life. And they'd buy it just for that. Just to have that on their presentation, they'd buy it. But Marty, the real thing that becomes amazing is the 6.6 million ounces of gold using a technology like when I first studied Gold Strike. What I read to you the other day is a higher recovery at Gold Strike than I ever saw before. But let me use the lower one. They were getting 0.33 ounces of gold per ton recovery. And this study, which was all third-party eyeballs, was 0.038. Call it 0.04, which by doing that, I'm being conservative. So that 20 billion in profit based on recovery at 0.004, I guess. It's 0.4 ounces of gold per ton. 0.04, sorry, 0.04 ounces of gold per ton. Well, the two processes which have been discovered, and I talked to the company today, they've made progress. So it's not like nothing's happening. They've made progress, which is why I'm getting worried about the timing. I don't know how much longer we have. But their recovery, those two processes, are at 0.2 to 0.25. It's 5 times the recovery, or better, actually. But let's just use the 0.4, not the 0.038, the 0.04. That works conservatively. And instead of using 0.25, we'll use 0.20. So you would have 6,600,000 ounces of gold times 5. That's 33 million ounces of gold. So going back to your point, Newmont and Barrick could double their proven reserves just by issuing shares. And they don't have to start producing it right away. It has the value. They don't even have to really prove it right away. As long as they put it on their presentation as maybe probable, it has the value of saying we can produce down in Nevada, till 2050. That's the value they'd have from getting it, and also not having competition. But if you take 33 million ounces times $3,000 in profit, it's just ridiculous. It's 99 billion. But we're a long way from that, because the pilot plant has to prove that it works before anybody's going to believe it. But once it does it, there will be no doubt. And so what kind of premium do you put on that kind of upside if you're Barrick Gold or Newmont or both? Right now, they don't know the story, but I would guess if I were Barrick Gold, I would use the 6.6 million ounces, which is a big number, and then maybe use this upside as like an option, an optionality on upside. But it even gets, Joe Marty, without going through calculations again, it even gets more profound. That's based on 200 feet. They did drill down to 400 feet, and it worked. And it was third party, but it'd have to be all done again. But you can double these numbers. You can double those numbers. And the fact is, it could go, it could go down to 800 feet. They believe it goes down to 600 feet. So you might triple those numbers. And then that's two parts of the prospect. If you drill in between and around, I mean, the upside, once the process is proven to the satisfaction of outsiders, it's like the Carlin trend. And in fact, it's almost like that Kyrgyzstan play. The permits have been kept in place. The time to production is not high. Most new mines take 10 years, 15 years. This would be, I mean, the pilot plant would get going probably in 90 days or 6 months from full installation of everything. But production could be very rapid. I think the most likely thing is exactly as you, that's why I'm taking so much time on this, Joe Marty, is exactly what you say. Newmont and Barrick come and buy it. And so then the question is, what do you pay for the gold in the ground? And I don't know the answer. I used to know it, but gold's now $5,000 an ounce. I would guess you could pay $1,000 in the ground, but maybe 500, maybe 250, maybe 150. I mean, at 150, we'd probably get a royalty. That'd be $500 million. It's not. Let me make sure that's right. On 33 million ounces times 150. I think it's too low. No, I was wrong. It'd be $5 billion. $5 billion. So that's $5 a share just to buy it out at a low number. So it's very exciting, Joe Marty, and yes, we have to get it done. And my strategy, as I've been thinking about it, is if a group of us could raise anything from $25,000 to $100,000. I know it's not a lot. It would allow the company to fully fund the things that keep the company alive and keep the licenses and the leases alive for another year. And it would give us negotiating strength against the, against the founder of the company, who is the guy with the technology. I think he'd like to just, take the whole thing. Although I think he's honest and he wouldn't. But at some point it's ready, it's time to move on. Anyway, it would give leverage to keep it. So anyway, that's what I'm thinking about. If I can raise enough money to buy another year, maybe in that context, working with the company, Railtown will have enough time that it goes up, that amongst us, we could do the 5 million. It wouldn't have to come out all at once. It'd probably have to go in escrow. as a project amongst us, for whoever wants to be part of it. I would want to do it with the investor who created the opportunity and created the contract. I wouldn't want to cut him out. And I'm sure if we made progress, he would join in. But that would be an exciting upside. The only problem I have, Joe Marty, I haven't been able to come up with a strategy. Silver was my strategy, and one other private company. I haven't come up with an offset to the risk to replace silver or this other private company without putting up a lot more money. There's a couple of cash flowing projects that I know of, and there's two, well, maybe three mining projects that could cash flow right away. So if we raised more than the 5 million, I think I could structure a project that has enough cash flow and upside to essentially make the risk in funding that pilot plant completely disappear, which is what I thought silver could do. But anyway, maybe that's enough time on it. I think we should try to do it, and I think there is a way forward. It's going to involve a little bit of money, and it would be great if Railtown suddenly went to $5 or $10, or even why get, if it went to $3, it would be great, because we could start under the guise of filling out the whole project. It's not, you don't typically, although it's always a negotiation, that's the problem, but you don't just give the money. You do it in a measured way so that milestones are met. And that'd be a really great project. I just don't think it should be the only thing we do, because as exciting as it is, we have to acknowledge there's a risk of failure. I think it's a low risk, but there is a risk of failure. But anyway, let me move on Railtown. Neil, good afternoon. Neil, how are you? E. Belanger, if you and Tony would stop your childish behavior, everyone would feel better. I enjoy listening to you both. But when you start criticizing each other, I turn off the TV. All right. Well, I'll stop doing it, Eric, if you'll promise me one thing, or you'll tell me one thing. How do I prevent Tony from telling people that this is just like any other stock? I guess I don't. I guess I just let people believe what they want to believe. I'm sure Tony's a great guy, and he must be, and I've never listened to him. All I can tell you is when I came out with Railtown, he immediately attacked it without doing any due diligence. And my opinion is Tony works for the shorts, either intentionally or as a, just somebody that doesn't understand what he's doing. I believe Railtown is the way out of ever investing in a meme stock or a squeeze play ever again. I believe Tony wants you to continue to play in that space because that's where he lives. I could be wrong. Maybe he has an idea for you that can break you out of it. But all right, I'll just assume the world's much better for Tony glomming on to Railtown. My opinion is he's going to take that audience, this audience. I don't, it's you, it's not me, and direct it to other investments that I think we should stay away from. I'd much rather move into a better strategy than that. But all right, I won't. He can. It's not so much. I hear why you say it's childish, but I don't know that it. I guess the way I do it is childish, but I don't. I'm dead serious. I think these people, and I lump him there. These people want your money, and they want it all, and they've done it through stock after stock after stock after stock. And anybody that's still promoting GameStop and the theater company, what the heck are they doing? That's how I see it. And I will guarantee you, when this stock gets up to $2 or $3, he'll take credit for it, but he'll also be telling you need to diversify out in these other stocks. And I just don't think people should do that. But let's let it play out. And I guess the 17 million shares here that we've built up belong to him. And I guess the idea flow after it works belongs to him too. I won't fight it anymore. It does offend me that he attacked right out of the gate, not knowing what he was talking about. And so I do think he works with the shorts, but I guess he doesn't. And I do think, Eric, you have the judgment to determine that he doesn't. So listen to him. I mean, I'm sure he's great. I've never listened to him. I have been attacked by him. Railtown, Neil says, Railtown AI is going to be just fine. We have to allow TELUS, AIP, Universe. I think it's Uniserve, but I'm sure that's spell check, to gain traction and get several quarters under their belt. I don't agree with that. That's Tony talking to you. I don't know if that's where you're getting your idea. And that's one reason I call it distinct split. It sounds so reasonable. Oh, wait 2 years. Diversify. I'm telling you, that is their playbook. Whether he knows he's doing it or not, it's their playbook. I don't even want a short squeeze here. But if you follow that playbook, I think you're going to miss the chance, Neil, and I'm not criticizing, that you have to establish the position in Railtown now. I think the closest, and maybe that's a good time right now for me to stop talking and show you something for 8 minutes, if I can find it. The closest comp is Railtown, and I bet the closest comparable to Railtown is Langchain, and I think Langchain is probably valued at $2.5–3 billion right now. Now the problem is that valuation is created by a bunch of private equity people who are, getting high in their own supply, smoking their own dope, believing their own spit, and everyone around them. So you can question those high valuations, but there's so much cash sitting on the, you know, in the hopper, you know, sitting on the sideline, in the funnels. There's so much cash that's going to be directed into this space that I don't think the emperor is going to be shown to be wearing no clothes in general. But even if specifically your concern is that the emperor has no clothes, I don't think it's going to show up for quite a while. This adulation in the form of cash is coming. But let me just play this to you, and it'll break my my bad comments or whatever on women and my bad comments on Tony, and we'll I'll open this audience full arms to Tony. His judgment is great, and I won't speak about bureaucracies or other processes, speed or not. It's just, we'll just live with whatever happens. Everything is good. I won't attempt to explain things outside of just the limited situation for Railtown Silver and other situations.
Models out of the box, meaning your company needs a chatbot on their site where customers can ask questions. Your company needs a chatbot on their site where customers can ask questions. Your company needs a chatbot on their site where customers can ask. Your company needs a chatbot on their site where customers can ask questions. The chatbot needs to store and retrieve all chat history as well as company knowledge base so that the agent can help your customer. And you might be wondering, how am I going to make this happen? Maybe your first instinct is to use OpenAI's SDK to write up a quick software and create and simulate a chat. But you soon realize that there's a huge missing piece, which is context. You realize that you need to store these chat messages somewhere and maintain conversation history. And most importantly, you need the agent to base their answer from the company's internal knowledge base to answer questions accordingly. Also, you're not so sure that the company will later change from OpenAI to a different model like Anthropic or Gemini. And now all of a sudden, this all seems like a massive undertaking. LangChain is an abstraction layer that helps you build agents with minimal code. In other words, all the pain points that we identified earlier, LangChain gives you the tools to address them using their library. And you might be wondering at this point, what's the difference between an agent and an LLM? Understanding agent is a critical piece in knowing why LangChain is a necessary tool for you to learn. When you use LLMs like OpenAI's GPT, Anthropic's Claude, or even Google's Gemini, you're using these models out of the box, meaning the model is rather like a static brain that answers questions based on what it learned during training. On the other hand, an agent has full autonomy with memory and tools to do whatever it thinks it needs to get the job done. So in the earlier case, let's say the customer asked this question: what's your company's policy on refunding my product that arrived damaged? Now, traditionally, you might code something custom for the specific need. Now with agents, things look a little bit different. An agent will have these capabilities for them to perform. First, ability to understand your intent using an LLM. 2, ability to store a company's knowledge base in a vector database. 3, ability to perform retrieval from vector database to find relevant data. 4, ability to search internal database to find what product the customer actually ordered. 5, ability to generate an answer based on the product they ordered according to the company's policy that we gathered. And lastly, ability to know the chat history with the memory. The biggest difference between traditional software and agentic software that you build using LangChain is this. In traditional software, these are typically programmed to run sequentially or conditionally based on code that determines how it's run. In the case of LangChain, these are rather developed in components and provided to an agent for it to decide how best to use its ability to deliver the task. Thankfully, LangChain comes with a large set of pre-built components. In our earlier example, to set up LangChain for your company's chatbot, LangChain allows you to use their existing tool that gives you direct access to LLM providers like OpenAI and Anthropic. This means that setting up an API to OpenAI can easily be done using a single line of code that says LLM equals chat OpenAI instead of writing your own implementation of API API connection, or even using the provider's SDK tools, which keeps you locked in and difficult to switch in the future. So later, if the requirements change to use Anthropic instead of OpenAI, you simply need to change the code to say LLM equals chat Anthropic, open bracket, quotes, model equals Claude 3 Sonnet. A similar process just like this applies to all other abilities that we laid out earlier, meaning components that we identified in what typically goes into chatbots like memory, tools, MCP, vector databases, RAG. All of these can be set up and configured using LangChain's pre-built libraries. Now, there's an extension of LangChain that helps you do more workflow automation called LangGraph. And LangGraph can interoperate with LangChain, which is covered in the next video just dedicated towards LangGraph for you to check out. So similar to earlier, when we had to write code to manage API calls to LLM, without LangChain, you would have to write your own logic to convert your company's document into semantic meaning through text embedding, store these embedding into a vector database like Pinecone or Chroma using their SDK, implement your own semantic search, and then inject these results into prompt at runtime. And on top of that, managing state, managing memory, managing tool routing logic. As you can see, the scope of writing and maintaining these can get out of hand really fast. Thankfully for LangChain, inside LangChain's library, you can import modules like Chroma for components related to vector database, OpenAI embedding for components related to text embedding, conversation buffer memory for components related to keeping memory in chat. And there are so many more components like this that help alleviate development efforts that go into building agentic software, like company chatbots that assist customer with return policy. With agents becoming the new way of building software, learning how to develop agentic software is becoming a critical skill set to have. And libraries like LangChain can help your team drastically reduce development time and accelerate your path to market by using pre-built modules instead of reinventing the wheel on tasks related to building agentic software. Now that we covered the conceptual elements of LangChain, let's look at how it looks like on a practical level. We can look over at this lab specifically geared towards how to use LangChain. All right, let's start with the labs. In this lab, we'll build our way up from installing LangChain to deploying a fully functional chatbot that combines memory, knowledge retrieval, and multiple AI models. Use the link in the description below to access the lab environment to follow along with me. The first question presents us with this scenario. Our company needs a chatbot, but we're realizing that it's more complex than just calling an API. We need to install the complete LangChain ecosystem. We start by creating a workspace called LangChain-lab and setting up a Python virtual environment to keep everything isolated and clean. After upgrading our package tools, we installed the core LangChain libraries that form the backbone for building AI-powered apps, along with LLM provider integrations like OpenAI, Anthropic, and Google, so we can plug in different models easily. For storage and retrieval, we'll use FAISS or FAISS, which is the vector database used for semantic search and embeddings. We'll also install python-env to manage environment variables securely. And finally, Gradio to quickly build interactive demos and user interfaces. Next, we dive into prompt templates, which are really the foundation of LangChain. This shows how prompt techniques work. You start with templates like, tell me about a certain topic, fill in variables like topic equals LangChain, and get the final prompt, tell me about LangChain, ready to send to the LLM. We have 4 example templates here. We start with basic templates that use variable substitution. Think of them like Python f-strings, but for AI prompts. This code shows how to use LangChain's prompt template. First, we create a template with placeholders for products and feature. Then we fill it with values like LangChain and AI orchestration to generate a marketing slogan prompt. After that, we test it with different examples: smartphone, electric car, AI assistant, each time replacing the placeholders to produce new prompts. Finally, it saves a small progress flag in the file called basic-templates.txt. Then we move to chat templates that structure entire conversations with system, human, and assistant messages. This is how we maintain context and flow in our chatbot conversations. The few-shot learning section is particularly interesting. Here, we're teaching the AI through examples. We show it patterns like happy to sad and tall to short, and it learns to apply this to new inputs. The code demonstrates this beautifully with a template that learns from examples and applies the patterns to new words. Take some time to explore the advanced templates sections yourself. It covers validation and structured outputs that are essentially for production applications. Make sure to create the files and execute them using the given commands before checking your work. Now we connect to multiple LLMs through a unified interface. What's clever here is we're using a proxy server that gives us access to various models like OpenAI compatible APIs. It's an API that looks and behaves like OpenAI's API, but it doesn't have to come directly from OpenAI. This is where a proxy server comes in. It makes the other models like Anthropic, Google, open source LLMs, and etc. behave as if it was from OpenAI. We start with a simple connection, then explore how messages work in LangChain. Using system message and human message objects to structure our conversations, the code shows us building conversation history that the AI can reference. The model configuration section demonstrates something crucial, which is temperature control. Set it to 0 for precise, consistent answers, or higher for creative responses. We create different models instances for different purposes. A fast model for simple tasks, a reasoning model for complex logic, a coding expert for programming questions. The code even shows us how to enable streaming for real-time responses. Create the script files and execute them. Once done, check your work and move on to the next question. Here's where it gets powerful. LCEL, the LangChain expression language. It's a new way of building and chaining components in LangChain. Instead of writing long, complex code, LCEL lets you create simple, composable pipelines. Using pipe operators, we chain components together elegantly. With streaming first, you don't have to wait for the whole answer. The response starts flowing in immediately. Async native means everything runs without blocking, giving you smoother and faster performance. With batch processing, you can handle multiple inputs at the same time, making things more efficient. And type safety ensures that all your inputs and outputs follow the right structure, so nothing breaks unexpectedly. The code literally shows prompt piping into model piping into parser. It's clean, readable, and makes complex workflows manageable. We build a chain that takes a question, formats it into a template, sends it to a model, and parses the output, all in one flowing pipeline. Here's what's happening with LCEL in that snippet. We first define a model, chat OpenAI, that connects to GPT through a proxy. Then we create a prompt template with a placeholder question so that we can reuse it for different inputs. Next, we add a parser that converts the model's output into plain string. Finally, using LCEL's pipe operator, we link these components together, prompt to model to parser. There are other chains such as parallel execution, dynamic routing, and advanced LCEL that I'll let you explore by yourself. Create and execute the script and check your work and proceed to the next question. In LangChain, memory is the system that keeps track of conversation history, the context. It stores past user inputs and AI responses so that the model can give you answers that feel natural, coherent, and contextual, just like a human would in an ongoing conversation. For memory systems, we implement in-memory chat message history wrapped with runnable with message history that maintains context across interfaces. The example demonstrates this perfectly. The AI remembers that the user introduced themselves as Alice and loves Python and can recall this information later in the conversation. This persistent context is what makes conversations feel natural. The RAG implementation is where we connect our chatbot to actual knowledge. We load a document about LangChain itself, split it into chunks, create embeddings, and store them in a vector database. When user asks a question, the system retrieves relevant information and generates informed responses. The code shows the complete pipeline from document loading to question answering. By the way, if you haven't learned RAG yet, check out the video we launched last week on our YouTube channel. Okay, finally, everything culminates in deploying our chatbot. The lab has prepared a complete application that combines all these elements. When we run it, it launches on port 7860 as a fully functional chatbot with memory, knowledge retrieval, and multi-model support. What makes this powerful isn't just the individual components, it's how LangChain provides a coherent framework for production-ready AI application. Without it, you'd be writing custom implementation for a custom memory, building semantic search from scratch, and managing complex model switching logic. The beauty of LangChain is vendor independence. If your company decides to switch from OpenAI to Anthropic, it's a one-line change instead of rewriting everything. As you work through the lab, experiment with different temperature settings and model configurations. You'll quickly develop an intuition for when to use precise versus creative models. For more in-depth courses and hands-on labs, check out our AI learning path on CodeCloud. Let us know what you'd like to learn from us in the comments below. And don't forget to subscribe to our channel and to be notified when we release new content.
All right. That's Code Cloud, spelled with K's. So LangChain has gotten maybe a head start in people's minds, but eventually you're going to start seeing descriptions of Railtown, and maybe not. Maybe Railtown doesn't want to tell their story like that yet because they want to lock up their contracts. I don't know, but I think you'll eventually see Railtown come out. When I listen to Lang Chain, number one, I don't know everything they're saying, but number two, it doesn't seem to be as comprehensive as what I've been told Railtown is. But, I'm not the one. I'm not an engineer. I'm not a software guy. So I'm not the one to listen to on that. All right, let's keep going down. Eric says, if you and Tony would stop your childish behavior, everyone would feel better. I enjoy listening to you both. Okay, I think I already read that one through. Neil Gondek, Railtown AI is going to be just fine. We have to give it several quarters. The thing here is, and I guess it's just a difference of opinion. I don't think let me put it this way, Neil. All it takes is one institution. Maybe, I don't know, what are the largest investment pools in Canada? Let's say for AI, companies. I won't say startup. It's not a very good question. All right, so they have that was my question. You're not going to be impressed with it. What are the largest investment pools in Canada for AI companies? That's not well written. Canada's investment landscape for artificial intelligence, this is according to this Google AI search, is supported by a mix of government-backed funds, venture capital firms, and massive infrastructure investments from global tech giants. As of late 2025, Canadian startups have attracted significant funding, ranking 4th worldwide. Wow, that's a pretty big number in private AI investment. So they give a list. Here are the largest investment pools and investors for AI in Canada. Number 1, government and strategic funding initiatives. And this is an advantage I think Railtown has even over Langchain, by the way. Canadian sovereign AI compute strategy, which we've been talking about all along. And they give this as $2 billion plus. Announced in late 2024. I guess that's a government initiative. This initiative is a massive investment to build domestic AI compute capacity. It includes $1 billion for public computing infrastructure, $700 million to grow Canadian AI champions via the AI Compute Challenge, and $300 million for the AI Compute Access Fund for small and medium enterprises. Wow. Then Scale AI, which is $100 million. It's based in Montreal. This is a national AI cluster which regularly funds AI adoption projects, such as a $250 2025 round of nearly $100 million for 23 new projects. And then they have a Sustainable Development Technology of Canada. This is SDTC. I hope it's not contagious. Actively funds AI applications in clean tech, which the data center is. It's, I assume that's what they mean by clean tech. It's hydropower. Anyway, then number 2 is top venture capital investors in Canadian AI. Domestic investors have been the most active, accounting for 86% of the top venture investors in Canadian AI startups. As I read these, I wonder how many of these either are privy to material information in the case of Railtown, or just haven't heard it yet because the one bank that knows it, Canaccord Genuity, might still have it on their restricted list. We don't know. Let me give you this list of names. BDC Capital. This is Business Development Bank of Canada, ranked first. BDC Capital has participated in 148 deals in the Canadian AI space over the last decade, approximately. Real Ventures, a highly active firm in Montreal, ranked second with 81 deals. And then Mars, M-A small a, M small a, big R, big S, Investment Accelerator Fund. It's a Toronto-based fund, and it ranks third with 77 AI deals. And then fourth is Radical Ventures, a Toronto-based AI-focused firm, ranks first in median-sized deals, $10 million. Well, I wonder if they do public deals. I don't know. And then we've heard of these guys before. Innovia Capital and Panache Ventures. They are significantly active with 23 investments for Innovia and 21 AI investments for Panache. And then you have corporate and foreign investment pools. Microsoft itself pledged $7.5 billion in 2024 and 25 to boost Canadian AI infrastructure and cloud capacity. BCE, that's Bell Canada, investing billions into a Bell AI Fabric, a massive AI computing network with 6 data centers. And remember, TELUS has 4 data centers. One's on, 1 to come, and 2 more behind it. Foreign R&D labs, major investment in local talent hubs from firms like Google, DeepMind, based in Edmonton, Uber, and Samsung based in Toronto. And then there's some publicly traded AI investment pools, ETFs. So for investors seeking exposure to the Canadian AI companies through public markets, and this is how you can do it. You can buy an ETF. CI, Global Artificial Intelligence Fund ETF, Canada's largest dedicated AI equity exchange traded fund with $1 billion in assets. Then you have TD, which has got to be Toronto Dominion, TD Global Technology Leaders Index ETF, a $3.5 billion portfolio with heavy exposure to AI leaders. And then you have Evolve Artificial Intelligence Fund. And this is an ETF based, focused on AI advancements. The symbol for the first one is CIAI, CIAI. The symbol for the second one is TEC. TEC. The symbol for the third one is ARTI. ARTI. I wonder if they know about Railtown yet, or if they do, if they're blocked from buying it. And then the top funded startups in Canada, Cohere, a Toronto-based generative AI company, has raised over $1.44 billion. Deep Sky, focused on carbon removal, and BenchSci, it's for preclinical drugs discovery. As of August of 2025, according to PitchBook, 2,468 venture capital deals in Canada's AI space. They don't give a time frame, but they recorded 2,468 venture capital deals in Canada's AI space, totaling $14.5 billion. It says as of August 25. I don't know when they started that count, but that's quite a bit. All right, ask anything. Which Canadian funds invest in Canadian AI companies? All right, what's the answer? Numerous Canadian funds invest in Canadian AI companies. Government and private venture capital. Domestic investors are the primary source of early stage funding in the Canadian AI ecosystem. We already heard some of this. BDC Capital, Radical Ventures, Real Ventures, Innovia Capital. They have they just started $100 million US venture scientist fund aimed at commercializing Canadian AI research and homegrown entrepreneurship. And then we talked about Amars and Panache. We talked about Scale AI, Pan-Canadian AI Strategy, Export Development. We talked about these three ETFs. I'm obviously asking the wrong question. Which venture capital firms invest in Canadian AI startups? I'll just say companies. I won't say startups. Several key, it's always the same names. Several key venture capital firms are active in the Canadian AI ecosystem. Startup, seed, and major growth rounds. BDC Capital, Radical Ventures, Innovia, Real Ventures, Mars, Panache, Golden Ventures, another Toronto-based seed stage fund. Golden Ventures invested in AI companies such as BenchSci and Ideogram. Georgian, a growth stage investment firm. All right. Well, all right. I'm going to leave it at that. I can't. There's some names that aren't coming up that I don't know how to ask it. I did vent. How about private equity? Which private equity firms invest in Canadian AI companies? Okay. Maybe it'll give us, all those other questions gave the same names. All right. Private equity PE firms generally focus on investing in established mature companies rather than early stage startups. I didn't ask about early stage per se, where most Canadian AI investment occurs. However, some large Canadian institutional investors and a few specific firms do participate in the AI sector. Canadian private equity firms with AI exposure. The private investors in Canadian AI remain venture capital firms, but some PE firms or related investment arms are active. The first one they list is the Canada Pension Plan Investment Board. This large institutional investor acts as a strategic knowledge partner to VC firms like Radical Ventures, providing insights into the AI landscape and potentially investing in later stage or mature AI-enabled companies or those leveraging AI for growth. BCI, British Columbia Investment Management Corporation. This institutional investor has been noted for leading funding rounds for AI companies for an unknown company. OMERS, OMERS, private equity. While also having a venture capital arm, OMERS Ventures, OMERS PE division is involved in a range of investments and may have exposure to AI through its portfolio of established companies who are adopting AI for value creation. Brookfield Corporation, Brookfield Asset Management. This large global asset manager with significant private equity operations is actively investing in AI adjacent infrastructure like data centers that support AI growth. So Brookfield, we could look up how big it is, but I don't know. It says it's large. Novacap, a well-known Canadian private equity firm that invests in established mid-market companies, including those in the technology sector, some of which may be utilizing or developing AI solutions. Anyway, then it describes the distinction between venture capital and private equity, which boils down to early and mature. Joe Marty agreed with Neil. This cautious investor. Donna, he can't help it. The misogyny always slips out when he gets frustrated and angry. Some women must have done something to him in his personal life for him to be this way. I'm not misogynistic, but dude, I assume you're a man. Could you imagine if, anyway, if the thumb were on this, anyway, I'm just going to get away from it. You have a platform here to make your comments, but I'm not misogynistic. So, and he's going to come again. Agree with Eric Williams. Always says he doesn't care about Tony, yet he constantly brings him up. Let me be clear again. I don't know Tony. I do not know Tony. I think he came on here once as a text. I've never spoken to him. I've never heard his voice. I really don't care about Tony, but I care about what you guys do to investors, and I think he's part of it. Now, other people maybe don't think he's part of it. So let's not talk about Tony. I predicted this, and this is my own fault. It's going to become personal. It's going to be something wrong with me, and it gets away from the message I'm trying to say. Tony started out, whether it's not even his real name, De Niro. So I don't even know what his real name is. But Tony started out bashing the Railtown idea without any knowledge of it. And he did it pretty heavily. And he claimed he reads, he does due diligence. Really? This is very basic stuff that he's proud of. My opinion is, whether he knows it or not, he's helping the shorts, and that's what he was doing. Now, the company, Railtown, is led by gentlemen like Corey, and I think, and Canadians mostly are gentlemen and gentlewomen. And I think the company decided, rather than be wary of a short seller, why don't you try to win them over? So they won him over. But I still, look, he may or may not be a short seller, but the message, and if people don't hear it, they're going to be susceptible to it. The message from the jump is the same as bashers. It's the same as short sellers. And then his constant, and he's not the only one. He's not by far the only one. There's I think a sincere guy. Right now I'm forgetting his name. I met him. He works so hard on it, trying to understand the short position in GameStop and what's going to happen and all that. But the main thing these guys want you doing is they need your money to make their gamemanship work. And they want you believing that this is a day trading scheme and that you can win, and that if you go from stock to stock, meme stock to meme stock, you're going to have these great squeezes. All the people, and I don't have to say it's Tony, it's other people, but you know that Tony's been recommending GameStop all along, and the theater company. It's all about rescuing the big funds that got harmed in that squeeze, but then it's about mining gullible retail to get the people that hire bashers start shorting the stocks. You get a roaring kitty to get GameStop up to $80. They start shorting it down. Well, then the banker calls up that hedge fund. They've already sold a bunch of stock they don't own, and they have a big pool of money. And then that money goes over to the banker, so-called banker, from the hedge fund. The company issues shares. The company suddenly has cash. Where did it come from? It came from the people like Tony are giving advice to. Hey, the stock's 35, you better get in. Unless you are a really good trader, you're just going to be the patsy. And look, you could argue that Tony doesn't know what he's doing, which is possible, and others, or they do know what they're doing. My I have my opinion. I'll keep it to myself. But if people listen to that message, then they're going to get out of Railtown too soon. Do you see what's happened with Railtown? Tony bashed the hell out of it before he knew the story at 22 cents, 25 cents, 28 cents, 30 cents. Bashed the hell out of it. But then after he spoke to the company, he bought it at 48 cents. But I mean, you can believe it or not, and I could be right or wrong. But the one thing, if the short, let's call that heaviness a short complex. It's more than just shorts. It's a whole army of people dedicated to one proposition: stealing the entire market cap of any junior stock that needs capital on the North American markets. That's their business plan. And of course, you come here and say, and I'm talking to cautious investor, you come here and say, well, he's a gentleman, I'm wrong. Well, I admit this is not gentlemanly of me to point this out. But as long as everyone's being a gentleman, it's going to say Patsy on the top of our forehead. How much money did people here make based on the recommendations? Not just Tony, everyone else's. Except for the one honest guy out there, but he's out of Florida. What the hell is his name? George? Damn. Anyway, how much money did people make on those trades? They got suckered in as it ran up. And by the way, I said sell, but they ran up. And they print money to the company. That's what I'm against. I'm not against Tony. I'm against that manipulation that's always mining money from retail, always taking money. The key predicates for it: keep you uninformed, be a gentleman, bash me, which I'm an easy target, no question. Keep you emotional, keep you losing money. There's got to be a study of it in casinos and when you want people to gamble. I don't know it, but they know it. They know the whole plan. The only way they lose, is unexpected, almost uncontrollable buying. It's the only way they lose. What causes that? Well, they argue in the press that the pandemic caused a bunch of retail people to run these stocks up. I happen to agree with him that was too big, that it was just retail. To me, that was targeted. There was probably institutional drive behind that. But the key thing that confuses the sell computers and aids the buy computers is when retail starts buying all over the world, and then it gets a mania going, a meme going, that they can't protect against, at least in the short term. But then they can hire a bunch of people to keep that excitement going, run the stock up, like I just described, Roaring Kitty, run the stock up. The capital hedge funds short it back down. They have losses, they're licking their wounds, but as it's up again, they run it back down. They do a deal across, they get warrants that hedge themselves again. The bankers, so-called bankers, get fees. the company hires a young guy to be the CEO. He suddenly is building cash. And I told everyone, and of course you're not going to be honest about it. There's no way that you're going to make a squeeze in that stock, and there's no way there's upside in that stock. But they slowly have gotten the cash. I mean, I got it backwards because I said the value of the stock will go to its cash value per share. Well, so I thought it would go to $5 or $6 or $7. Well, they got the cash per share up to $19. So it's basically, they did it that way. But you're not making money in those trades. And so anybody that's telling you to do that either is learning or misinformed, or they're part of it. I'm against that. That's why I get upset. I get upset because I see what he's doing. He came in totally against this. And then he said, I'll become a buyer. I'll be reasonable. I'll be the gentleman. And he can poach in on all of you all, which is, I don't control this group. I've never asked for that. I'm not trying to do that. But when it goes up, he's going to say, hey, I called it. I called it. And now I think you should go to this stock. Well, okay. It's up to everyone here. They can follow his advice. But to me, and this is where I'm trying to make a distinction, I don't think anyone here, other than the one or two people who used to trade for a living, I don't think anyone here has the skill to make money in these manipulated, promoted stocks. I just don't believe it. They control so much of the battlefield. The only thing they don't control is the surprise. And by talking to Tony, this is my opinion, I could be wrong. It's not about Tony personally. If it weren't Tony, it'd be some other guy. By talking to Tony, they've been able to let the company, not intentionally, has let Tony know that, and it's my conclusion, they didn't tell me this, but I think it looks like February, maybe even March. I'm picking February, but I'm sure Tony's saying, why don't you wait 2 years? That's what he said last time. But the whole thing is, Tony can, if Tony's working with anybody, and he may not know he is, but he's learned something. He calls a trader, calls a fund that's close to him. Hey, nothing's happening until February. Well, guess what? They can walk this price down for another month, mining money out of the public market. When it finally breaks, there's plenty of ways to stop losing money and even hedge it, but also just walk away from the accounts. But until then, they'll be mining money. That's what I'm against. That's what I get so upset about. And I see him as an active player in that con job. It's not about him personally. It's about that con job. And while everyone's a gentleman, that con job works. He hasn't been smart. He hasn't been predictive. He didn't come up with the idea of Railtown. I'm not taking credit for it either. I'm not saying I'm any bloody genius, but what's his interest? Going from bashing, and now he's long. And he gets long at 48 cents, yet he can tell you with a straight face that in December, finally it's come into a buying range. which, by the way, was, I don't know, can't do arithmetic in my head, but it was about 20% higher, 25% higher than it is now. So, you know, I'm not much impressed with people after the fact claiming that credit for something. There's no way to pick the bottom in a stock, pick the timing. I mean, I've accepted questions and done it, but it's a foolish thing, and I would never. If it worked, I would admit that it's as much luck as anything in the very short run. But when you see a stock mispriced, that's my opinion. I understand that his advice is wait for a few quarters, look at it as a 2-year, and as the revenues come in, you should start to. Well, I just totally disagree with that, and it alarms me that message gets out there, because I think it's going to screw with people's investment here. That's what I get upset about. And yes, I call him Tony the Tiger, Tony the Turtle, or whatever. I don't believe his name is De Niro. So what do you call him? But you're right. That's childish, and it's not very gentlemanly. But I don't find these people who come to take your money to be gentlemen. And I've admitted to you many, many times that my go-to stance is I don't trust them. You bring a new face on, a new big story, I don't trust him. There's probably, in this whole circle of people, there's probably 2 people I trust. One guy doesn't talk to me anymore. And the other guy I met at the SEC for the first time, and I think he's terrific, and that's Busy Brands. That's about it. There's 2 or 3 other people I consider friends, but they're not active in the fronting in all of this. But I don't. You got to remember, this is a multi-trillion-dollar steal, and they do it. There's the big funds that do it, like probably Stevie Cohen's fund. I wish you would stop talking about him. I would listen to you, but you're making it personal. No, I'm not. I'm saying that guys like Stevie Cohen hire these people at arm's length to do this shit. It's my opinion. But I think the evidence is there too. There's a budget, there's attorneys. This is a campaign to steal the market cap of as many small cap junior companies in the North American market that are stressed into signing toxic financings. And you've seen it in Finger, you've seen it in CRTD, you've seen it in Root, you've seen it in Wolf, you've seen it in MMAT, you've seen it in MULN, you've seen it in Nixie, you've seen it in Logic, you've seen it in the other Logics, you've seen it in GTII. You've just seen it over and over and over and over again. Yet you get mad at me, which on one hand I understand. You get mad at me when I notice the pattern coming at you again. They come as gentlemen. They come as bashers. They come as jerks. They come as I'm just learning. But it's They probably sit around the same conference table with Quotrons, and they're probably laughing at each other as they're typing. But that's what I get mad about. That's what I get mad about. And I think it's hard to personalize it when they don't even give you a real name. I don't think Tony DeNiro is the guy's name. But if the only ideas he's given you are a couple of meme stocks and bashing Railtown, and then suddenly he's a fan, and then suddenly he's all cautious, and then suddenly he's tapping on the back, he's setting you up, in my judgment, for when Railtown goes from 25 cents, let's say, to $2. Hey, that's a win. Win for retail. It's time to get out. You got to come over to this. Hey, listen to me. I did my DD. It's time to right size your position. Come over in some other crap. What my position is we need to get away from all of it. Now, Railtown is down here on the over-the-counter because they funded their company early with their own money and friends. They went public in Canada, and then they came down here with the intent to raise money in the United States. Thank God they didn't. Thank God they didn't. So that's the only reason that Railtown's here, is they started early in Canada, and that ChatGPT was the kind of aha moment on Wall Street, and then everything caught fire. But it had been building for a while. But until that break, they were having a hard time raising money, so they came down here. But lucky for us, they didn't. So there's no toxic financing out there on it. But when Railtown announced MOU, LOI, Canaccord Genuity, Weeks, takeover, buyout, acquisition, man, guys, they set the wheels in motion to steal from you. One way, they start shorting it. The computers just start shorting, selling stock they don't have. But it's more than shorting. This is an institutionalized campaign. They're all in on it. It's trillions of dollars. And as they drive it down, one goal is to break up the deal. So if the company doesn't close the deal, all of a sudden the stock price collapses, they win. Secondly, if they go ahead with the deal, the company being acquired asks for 500 million shares instead of 50 million. Again, it works for them because all of a sudden, on a per share basis, the benefit of the acquisition is diluted. And the final thing is, in both cases, if the company's down there and it needs capital, they go to Canaccord Genuity, they go to Jeff Easton, they go to the Kramers, they go to Ruby Ehrenstein, and voila, all that stock that was sold that didn't exist, hypothecated, rehypothecated, hedged against what's in the central depository. Bill Clinton, thank you. And expanded. I mean, the collateral's up there, but it's all expanded. It's leveraged to all hell. But you don't own it. Your brokerage firms own it. And so it comes, they walk it down. Tony knows this. He uses those words. They walk it down. And then if the financing comes, that money comes from the people that sold the stock. And hey, presto, everybody makes money, but you. That's what I get upset about. And then when I get upset, how do you point it out to you how do I point it out to you if I don't use his name? I guess I shouldn't call him the turtle or the tiger, but I'm pretty sure De Niro is not his last name. So how do I just say there's people out there, and then you don't focus on it. The threat to you in this investment two things. One is the price action. They've walked it down. So if you bought it at 40 cents, 50 cents, 60 cents, they've walked it down. And they do it every day. Red, 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 red. So it gets in your psyche. Number one, the company's not doing anything, and the company sucks, and management sucks. Everything's urgent. Then it gets you. They get you thinking short term. They get you upset and emotional. You start comparing it to other stocks you've been in. All normal stuff. It's all human. It's very human. As it goes down, the pit in your stomach, oh, not again. Not again. So when it comes back to break even, you sell. That helps them out. Or maybe you sell lower just to sick of it, tax losses. Or as it goes back to break even and gets in the green, you sell out quickly. So the very price action that they cause gets you in a frame of mind to cheat yourself out of the potential gains here. The second way is you get messages. I won't tell you from whom, but as far as I know, there's only one guy out there with it. Messages diversify. What the hell? These are all manure. These are all crap stocks. Look at the list. Just 5 of these stocks. Frankly, right now, including Railtown, GDC, $4.39. Last time I heard of it with very firm words, it was almost $8. Well, this is worth $22. Okay. And of course, Railtown's 25 cents. That's my big black guy. Finger is 121. That's going to 3,000. If you listen to what the man said. Mountain, MTEN. Oh man, this one's going to happen. You got billionaires in here. It's 28. Now you can get it at 22. You get it at 18. Oh yeah, sure, it's going to hundreds of dollars. Well, MTEN is under 2 cents. ZJYL. That's going to 12. It's going to 30. It's to be 35. It's 14 cents. I don't have to point out to you logic. The American Stock Exchange guy, there's systems in place. He doesn't know either. Nobody sees the risk. And you get mad at me for being an asshole. Well, nobody gets angry about it. But, I mean, logic to him was going to be $1, $1.50. Zero. Collective audience, it'd be $2, $4. Zero. What about the guy in the shorts from recruiter.com? He walked away with, I think, $3 million. Maybe it was 2.5. Who got the money? Not you. No one's upset. No one gets upset. No one. And you don't see the patterns of the behavior on the other side. and they rotate the faces and the names and all that. I mean, you get in a gray area if someone's just stupid or stubborn. And maybe that's how you see me, stupid and stubborn. But I showed you, I don't have it here anymore, or maybe I do. I tried to clean some things up, and I might have moved it over there. But I'll quickly look to see if it's here. Now here, is that it? No. Is this it? Yeah, here it is. If you read The Great Taking by David Rogers Webb, you'll find out what you're up against. If you read the Basher's Handbook, you'll find out what you're up against. And one of the strategies is to come in and befriend you. I would argue that Double D did that in the MMTLP spaces, to the point he can talk to the chairman of the firm. To me, that's a huge risk, because why? They want to get NextBridge publicly traded so they can move their problem into the the electronic share morass of undelivered shares that they never have to account for. To me, you shouldn't be talking to the guy. To others, well, he's really smart and he's argumentative, and he always wins his arguments because he never stops talking. I don't know. I guess I should just be nice to everybody, and then they can play the games with your money. I don't know. I really don't know. Maybe I'm wrong. Maybe the idea of playing the movie theater and GameStop has been great, and it's been really profitable. But if they can get into your head that the losses there is the same sort of thing you're in Railtown, I think you're going to miss out on the upside at Railtown. Let me just show it to you again on Railtown, just so that you see what I'm talking about. But you may not want to see it. You just may not want to see it because you're so attuned to the stock price. My suggestion to you is, or my premise is, it's the wrong price. Well, you got to diversify. Why would you diversify away from something that once the people who are in the know and use BDO, once they're able to buy, they start buying? I just gave you a list. I don't know, there was Brookfeld and BD something, but there was Omer's and Omer's Ventures, for example, some other pension fund. These people start buying, it's going to snap back unbelievably. But if you're following this insidious message that Railtown is the same as the rest of these, and somehow that diversifying across a portfolio of crap is going to turn one of them into a diamond, that's the argument that caused the great financial crisis. If you take tranches of portfolios, if you take the high-risk portfolios and put them in a new portfolio, you can put a AAA on it. It's hogwash. But as long as you believe Railtown is another one of these stocks, you're going to think I'm crazy. But here's Langchain. I just showed you the Langchain video. I would argue that we're now 9 months No, probably 8 months, 7 months, 7 months from the pricing of Langchain at 1.25 billion. And Langchain's all over everywhere. I would guess the next time it comes out, it'll be priced somewhere between and they will raise more money because they're not making any money. And they need to, they're making a lot of publicity about what they can do, but they have to fill in their technology. So I think the next raise will be, give or take, $3 billion in Railtown. But if we just use this number, we don't adjust it to higher numbers. We just use the 1.25 billion. And why don't we use Morgan Stanley's market cap? 47.7. $71. Okay. So we'll divide the summer valuation of Langchain by Wall Street, by many venture and private equity firms. We'll compare it to the current market cap, according to Morgan Stanley, of Railtown, and we won't increase this since this is a number probably at least 7 months old. This is probably maybe doubled, maybe more. We'll leave it alone. So let's see what that is. Langchain is 1.25 billion priced over the summer, divided by $47,710,000. That's a 26. It's a factor, it's a multiple of 26, the difference. So if we use 26, on the closing price of basically 24.95, let's call it 25 cents. 25 cents times 26. And remember, I think Langchain's worth more than what they raised the money at. And whether it is or not, they'll raise money at a higher valuation. So 26 times 25 cents gives you a $6.50 target per share. $6.50 target. This is if it just snaps up to a Langchain valuation, not higher and not lower. So 6.5. What the guys do, what this complex does to you, they're going to tell you, well, when the stock gets on a chart or something, when it gets to maybe 250, when it gets to 250, they're going to say it's a win for retail, or nobody goes broke taking a profit. And you'll say, okay, well, yeah, it's up 10. 10x. I'll get out at 250. Sounds reasonable. I'll diversify or right size your position. Now, I'm not saying, look, if you're day trading and you're in a bunch of crappy stocks, that makes sense. But I'm telling you, Railtown, of course, it's my opinion, and you might call me stubborn. You might call me stupid. So, but I'm telling you, I think that price is probably low, by the way, but I think that's closer to the right price than just getting back up off the mat. And this would be new highs, of course, 250. So if you sell here, you leave $4 on the table. Do you see that? That's what I get upset about, is their messaging to you is going to trick you. And then when you're sitting there, you're going to have to calm yourself with things like, well, at least I took a profit. Well, I diversified. Well, you know, so-and-so, he's a gentleman and, you know, he does his own DD and you know, come on. Now, that's one thing about this price of 650 that I want to tell you is this message is going to come to you. Oh, I've been reasonable, my DD, you'll get a chance to buy back in, you know, all that crap. In this case, this isn't a day trading stock. Those things might apply to day trading stock. This isn't one. The reason to be in this, and for a while there, I thought that it was much more urgent than it was, but I think it's going to catch up like a bungee cord. The other thing is, do you think when they raised money for Lang Chain at 1.25 billion, that money represented the final value for Lang Chain? Do you think that the money raised at 1.25 billion represented the final value of the addressable market? Which, not that price, but into a market that had its final value? Or do you think that those private equity guys and girls are trying to get 10x for their fund, or 20x, or 30x for their fund? Which do you think's more likely? Is the $1.25 billion price valuation for Lang Chain the starting point or the ending point in the private equity channel? Which do you think is more likely? Is it a flip of the coin? I would suggest to you that they're going to try at least to get their 1.2 billion valuation to $12.5 billion before they dump it off. At least. That's 10x from here. So that's my second point about this 650. And I have to give a caveat to it. But you're going to hear, wow, you got to take that win for it's 20x, it's 25x time. That's the day trading thinking. This isn't a day trading stock. I personally think it's your last chance to get out of this hellhole we've been in. for 4 or 5 years. Now he's going to ridicule me with his platinum blonde. That's fine. But if they're going to try to make Lane Chain go from 1.25 billion to 12 billion, 10x. Now that's my assumption. You may think that the 1.25 billion for Lane Chain, they're just interested in it going to 1.4 billion and they'll get out. They're not day trading Lane Chain. So that's 10x. Well, if you take $6.50, the starting point, like the 1.25 billion, that's where the 6.5 comes from. 10x on that is $66 a share. They're going to make you miss out on this too. That's why I got upset. That's why I keep going. I fight. And then you say, well, it's childish. Is it childish to try to protect you from these two diminishments in your reward? I don't think you're going to see a trade like this again in your lifetime, if you're my age. If you're younger, you might see one. It'll probably be in a mining stock. Railtown is a setup. It's public. How many of these other stocks can you even invest in? You can invest in an ETF, but how can you? It's public. They've crushed it. And there's a blackout period. So it's kind of a perfect storm. But if your brain and your heart tells you, well, the stock price is down because all the news in it is telling you it should be down, or it's where it should be, I think you're going to miss out. And if people, let's not say it's Tony, although I think he's the only one active with this message right now, but whatever, let's say it's somebody else. If the message is you got to diversify, there's no diversification when you own shit, and shit. It's not diversification. It's all shit. You ever notice if one dog takes a shit and another dog takes a shit and another dog takes a shit and another dog takes a shit and it all gets collected and put in a bin, it all looks like shit. That's not diversification. I think Railtown, I think it's stupid to diversify out of it. But there's risks. I understand that. And it's taken forever. I think that's been unfortunate. But just to get to Lang Chain's value, it's $650. These private equity guys, they're not looking at 10x. They're looking probably at more. But if we assume 10x, that's a huge upside. Now, let me give you the caveat. I think the bloody caveat is, unfortunately, I think the most likely buyer is Microsoft. I think the second most likely buyer is probably TELUS. And I think that's tough. Well, I'll put it there. I think and I'm not sure that's the right, symbol. But I think I'll say the third most likely buyer is Constellation Software itself, because they're under, the SAS is under attack. And I don't know, what's another one that might go in and buy it? Tesla, Facebook, Amazon, maybe NVIDIA. I'll say, I don't even know the symbol of NVIDIA. I'll say at all. So here's the caveat to that. If these companies buy it at early at $15 a share, not the $65, we'll get a good return, but the rest of the return will happen inside these stocks. And that 10x I show, it's a pretty nice run from $6.50 to $65. It might happen inside Microsoft. And once you have Microsoft stock, maybe only double your money. Maybe you only get, over a long period of time, by the way, 5-6 years, maybe you get to $30. Your investment is equivalent to $30. So that's the caveat. If they sell too early and at such a low price, it depends who buys us. Now, I think TELUS, if TELUS bought us right now, reasonably now, you could go from $15 TELUS stock, I don't know about 150, but you might get to $75 if their whole strategy works. I have no idea, but I would say there's a little more upside potentially as I sit here than there is if Microsoft buys. But maybe Microsoft goes up 10x from here. Who knows? Constellation Software is down, but I don't, even with it being down, I don't think that'll go up more than 50%. So anyway, that's my caveat, is those really higher targets might happen inside of a bigger company. So we'll just have to play it by ear. We'll have to see what happens. The best thing would be a bidding war, let's say in May or June, and the revenues have ramped up, let's say by June, by the end of the first 6 months, let's say revenues have already ramped up to a projectable 150, 200 million. That might be high, but if that's projectable out there and there's a bidding war, well, then we'll get a nice high price. But those are all things out of our control. Anyway, that's why I get so... It really isn't Tony. I don't know the guy. But it's the message that I fight against. And any idea that you should remain trading these stocks for now, I think it's crazy. I just think it's crazy. Let me show you one more thing. If you own 40,000 shares of, there's a reason I'm using that, because it's easy arithmetic. If you own 40,000 shares of Railtown, and that's your only account, right now you have $10,000 in your account. So if you spread this across Tony's I'm not picking on him, but he has 4 stocks on his last thing I saw. AME, GMC, OBPH or something, and Railtown. If you diversified, spread it out across 4, and I'm not trying to pick on any one of those ideas, but if you spread it out across 4, you would have $2,500 in Railtown and $2,500 in the rest. My prediction on 2 of them, they'll just be flat for the next 5 years, but who knows? Well, if you only have 2,500 here instead of 10,000, I should be able to figure that out right away. Maybe I miscalculated how many shares are here. Yeah, I did. I miscalculated the price because, oh, I got it backwards. All right, I see. So you would only have 10,000 shares for 2,500. That's right. I just too tired to think. So if you diversified your 10,000 shares, and let's say I'm right, it goes to, let's not say 65. Let's say it goes to $25. Your 10,000 shares become 250,000. And I would argue the other three ideas don't do anything. I'm not picking on them, but they're all part of this milieu of crappy stocks. Odds are, over the next 6 months, those don't do anything, but maybe Railtown goes to 25. You have $250,000. That's pretty good. So you've diversified, and 1/4 of your account is now worth 250,000. But what happens if you didn't diversify? What happens if you didn't diversify and you have 40,000 shares going to 25? You have $1 million. $1 million. And that's, to me, to diversify into a bunch of no-win stock ideas or day trading stock ideas so you can win in a short-term day or swing trading makes no sense to me. You've got a fundamental story here with the wind against your back. It's not perfect. It's not perfect. We've had to wait, and there's still risk in it. But these others are all risk. You have to pay attention. You have to day trade. But if you diversify and Railtown works, you've got 250, and it's probably, the others are still worth about 7,500. So you might have 260,000 in your account. If you just have Railtown and it goes to 25, you have $1 million. And you'd say, well, you're not diversified. What? That's too risky. Well, what? It's 25 cents. The final thing to point out on this, though, whatever direction you go, but let me go my way. If your account, let's say in 6 months, it does go to $25. It might be too high. It counts on a bidding war. But I'm just giving an example. You have $1 million. Well, once you have that, the next time the Charm Boys or somebody on Twitter gives you an idea, you can put $10,000 into it. And you'll still have a chance in 6 months, in my opinion. If you really want to get into GameStop, you can then put 10,000 into GameStop or the movie theater. But guess what? As compared to your account, instead of being your whole account or 1/4 of your account, that foray is now just 1% of your account. I want you to get here. I don't want you listening to all these people until you get there. That's what gets me upset. And as much as Aw Shucks here wants to pretend that he knows me, he doesn't know me. That's as simple as my motivation is. Really childish. Tony upset with him, and he's done better prediction analysis on Railtown, so he's mad. That's not true. Tony didn't let people get into it at 22, 25, 28. Of course, I guess he would argue just getting into it in June was wrong, and I guess looking back, that's right. But he bought it at 48. He bought it at 48. I'm not going to show it because I'm not going to pick on him. But he bought it at 48 cents. So you're not right. Justin Babish, low volume and smaller offers on the spread. Yes. Justin Babish offer was 25.11. I need to see what you did. So you put the offer was 25.11. You bid 25, and they won't fill that. They won't, because the computers aren't set up for that. And there is no market maker, Justin. Back when there were market makers, they do that. So you upped it to 25.12, and they filled it at 24.384. That's right. They don't. Number one, they don't want to show it at the ask because they're walking it down. And the computers can cross a bit. So somebody might be making a profit in there. But it also could be order flow that's sold to somebody else. I don't know, but that always happens. If you go in at the offer on Railtown, I don't know any one of you over the last year who's paid the offering price when you've gone in. Maybe there's somebody, but they always do it lower, which is the manipulation. That's a good purchase, Justin. That's a very good purchase. It's really good. And you got it under 25. Man. And then what the problem is, you have leftover cash. And to go back in, it's frustrating. You got to pay commission again. That's good for you, Justin. What about copper? Well, copper was $1 or $1.50. And I don't remember the high point of the prediction. I don't remember it right now. But if I had to guess, copper might have a little bit further to go, but it's going to have a correction. Particularly if the market corrects. But I think what's going on with copper is pretty simple. Data centers and transmission lines and war. Copper is going to be huge when we reshore our industry and we rebuild the United States. But I think the demand for copper, particularly when silver's in short supply, is for the compute, as they call it, compute power, and the power of these data centers. There's huge demand for copper. And up in I want to say somewhere around Indiana or Illinois, one of the hyperscalers is rebuilding the electric grid. I mean, it's a government job, but they want to make sure they have electricity. Imagine all of those gigawatts that Elon Musk just put in Tennessee. You're going to need copper, or probably already used the copper. I think the answer about copper is the data centers. But copper, like any other asset in the Western markets, is manipulated and hypothecated and rehypothecated. So I don't know. I haven't looked at a chart, and I haven't followed copper really as a direct focus for a long time. But and I'm trying to remember the numbers that I've heard before, and it feels like to me copper, that's reaching the target that one guy predicted, but I could be wrong. Let me look up copper. I'll write it down. There's always, copper was in the doldrums and you couldn't get people to buy it. And now everybody, that's the problem with all these investments. If you're a day trader, or a momentum player, you can run the momentum. But if you're an investor, I don't know. I just have a feeling that take notice of copper, and I'd even probably say that about silver now. Take notice of it and put some cash aside. Next time it pulls back, buy it then. I think copper, like silver, the easy entry has already happened. On the other hand, for both metals, the demand is just going to continue. So I'll try to get a better answer than that. Could Railtown be the next NVIDIA in 5 years' time? MWQ8PC says, I think the likelihood is 32%. I don't think so, because I think they're going to be bought. And that, so your prediction might happen inside of another company. That'd be my one reason why it doesn't happen. Secondly, I think NVIDIA, at least for now, is so far ahead in the chips and accelerating, and they're going into a market that's going to grow to 75 trillion, that NVIDIA really probably justifies its price by that growth and the size of the market. There are competitors, of course, Intel, AMD, Google, I think, is competing, but I don't think Google's showing anybody what they have. I think they're keeping it in their own column. I don't know if Apple's going to catch up, but I bet the Soviets and the Chinese have desires. But it looks like NVIDIA for quite a while is going to be the best. And could Railtown do it? Yes. But I think in the strictest sense, NVIDIA is hardware and Railtown is software. And for that matter, Railtown is a piece of a stack of software. And if Railtown were to get as big as NVIDIA, oh my gosh, the amount of money competitors would put into creating similar software would be enormous. So I think it would block Railtown ever getting as big as NVIDIA or any of the big ones. I mean, you're asking me if Railtown could get as big as, I don't know, $5 trillion? I don't know. I guess it's possible, but I think it's low likelihood. Railtown might be part of NVIDIA when NVIDIA gets to 20 trillion, and Railtown might be a big part of why it got there, maybe. But I just don't think it'll be public. I don't think there'll be a unicorn. I don't think they have enough. Well, I guess if somebody brought a lot of money to them and they merged with some other company with a huge team of engineers, maybe they could be standalone. But they're calling LangChain a unicorn? I don't see it. I think that's marketing. I don't think LangChain's a unicorn. They don't even make any money, but they're trying to make them the next Cohere, the next OpenAI. Maybe it'll work. I don't know. I don't know work. I mean, everything's fake it till you make it. Everything's image, I guess, until it becomes reality. But no, I don't think Railtown will be NVIDIA. E. Belanger, Railtown and AIP will be the next Constellation software. I think that's right, Eric. It could be. However, there's a lot we don't know. And I think Railtown's technology, the rail tracks, conductor, and rail engine could be bought by a Microsoft, for example. I know Microsoft just bought, I saw it 2 or 3 weeks ago. They bought some small framework company, but I don't think Microsoft has anything right now to compete with Google ADK. So I think Microsoft's the natural buyer of Railtown. I hope they pay a lot, but whatever. But here's my point, Eric. What if Microsoft buys, rail engine, conductor, and rail tracks, bundles it in their software tool set for data centers, for teams, and increases. To me, they could pay $40 billion for Railtown, and then automatically, by incorporating it across their subscription and revenues services to other companies, just put it in there. And internal accounting, they could credit whatever revenue they needed to the Railtown acquisition to make it worth $400 billion, make it worth $1 trillion inside of Microsoft. So there's some arguments I can see where Microsoft will lay out the shares. But anyway, if Microsoft is buying that, what would they need? Why would they get involved in building? I guess they could if they had the people, but they're in the middle of an arms race in a whole different area. Why would they really care about the AIP network partnerships? So I suggest to you that if Constellation Software is a potential buyer of Railtown, and let's say there's 3 or 4 companies bidding on it and Constellation drops out, whatever banker's there is going to quickly notice their interest and try to negotiate for money and shares. Why doesn't Microsoft, if they win the bid, why don't they sell AIP Network Partners to Constellation Software? Or before the deal closes, why doesn't Microsoft give us shares for what I described, but then the AIP part gets spun off to Constellation Software, and we get Constellation Software shares. I think that's possible. There's a lot of things that we just a lot of variables we just don't know. Stanley Caldwell, hi William. I sent you an email on another matter if you have to respond this weekend. Okay. I did look at my emails, I guess this morning. I had a bunch of things to do today. I didn't see it, but that doesn't mean it's not there. I'll look, Stanley. Thanks for letting me know. Richard K. Sorry about your black eye, William. We feel your pain. Do I have a black eye? Or are you talking about my uppance? My uppance cometh? Yeah. Fair enough. I won't talk about feminization of society anymore. I don't need to. And, I'll let people follow Tony's advice off a cliff if they want to. But I've been very clear what I'm trying to do here. And I'm trying to get people their money back, because that's the biggest thing I hear. I just want to get my money back. And I'm trying to make sure that they can have a profit that pays for all this pain. And I wouldn't mind if they learned what's going on. These markets cannot be trusted. There's nobody looking out for you. Nobody. And you're the fatted calf. You're the sheep that needs to be shorn. And it's just, I just don't know. I don't know. I wish I had a different style so I didn't piss people off, but I just don't know how to get it across. But thank you, Richard K. Stanley Caldwell, saw you address my question earlier today. Just went back and saw it. Thanks. Oops. What happened to my MMTLP stock pick? I never recommended it. I bought it. I think I bought it on the Tuesday and the Wednesday before they stopped trading. I paid $8, $7.96 and $7.95. I bought it in my regular account and my IRA. I've since moved all of it to NextBridge. And I knew Torchlight, and I got a lot of people to buy into Torchlight. I never raised money for Torchlight, but I probably had, I don't know, a dozen, 15, 20 people in Torchlight. Not that I wasn't a broker. I mean, they just bought it and we all would talk about it. I traveled down to Texas and I traveled to Oklahoma, and I met with Torchlight board members and principals many times. I didn't ever meet with John Berta, but I spoke to him. And so when I say that I met, it's all confusing, but people on the board had another company as well. And I went up to meet a geologist who I believe was selling one of Torchlight's properties. Anyway, it's all years and years ago, so it's vague exactly in my mind. But I knew the Torchlight story, and I lost money on that. Other people did because the shorts, I didn't know about the what these people do, and they destroyed that company. And what's weird is if the oil's there, it was laid down back when the Flintstones were around. And it's just such a wacko way that our markets, they don't raise capital anymore. They suck capital out to a few leeches, and they don't even pay taxes on that. It's all just disappointing. All right, so I came to the end. By the way, I didn't recommend MMTOP, but what happened to it, it's worthless. MMTOP is worthless. But I think NextBridge has a good chance particularly in the next cycle for people to make all their money back and maybe more. But they got stiff challenges. I mean, everybody's against them. They're trying. They probably are successfully taking the Oro Grande from them. But there's other prospects and projects there that can make that stock successful. So I still think if people move their shares to NextBridge, they'll be fine. I heard here that brokerage firms are not accepting the transfers anymore, the transfer agent. I don't believe it. I would certainly, if I still had shares of MMTOP, I would call in multiple times and take notes on it, asking for my shares to be transferred. They're not shares. It's just a book entry. It's not even a book entry. They're non-existent, this MMTLP. But I would ask to have it moved to the transfer agent and get NextBridge. And I do it a dozen times, 20 times I'd call in. But then I put it in email to your brokerage firm over and over again and make them deny it in writing. Because I don't believe they can tell you that they can't move it. Now, it's possible, there were 165 million, something like that, shares of NextBridge. But if there were 1.65 billion shares of MMTLP sold into the system, well, that's 10 to 1. So the first 10%, ollie income Frio, you're in then. But there were people telling you on Twitter not to do it, so people waited. But it's possible that's in general. There's 105 companies in the situation. So it's possible 1, 2, or 3 or 4 companies don't have enough shares left. And they're just saving some. See, that's my theory. Every brokerage firm probably still has some left because they're saving some of it to make sure they don't get into a lawsuit. So if you become a squeaky wheel, I think you can get your shares. But, if a TradeStation or a Fidelity really did themselves on this, what I consider fraud, they may not have enough shares in their allocation at the DTC to take care of the problem. So they may have given all they could. And it's a shame people waited. But in general, the system, I think, still has something in the neighborhood of 60 million shares still available at the transfer agent for MMTO people to move into NextBridge. And by the way, that's the only thing the system owes you. It's the only thing. 1 share of NextBridge for 1 share of MMTLP. And guess what? Up until recently, I guess, you could have transferred that for the cost of maybe 1 or 2 FedEx envelopes. and you didn't have to hire an attorney. And it doesn't opt you out of a settlement, which is a misrepresentation that Double D gave. And I'm not picking on Double D or picking on Tony. I'm telling you, these messages mislead you. That's what, it's the messages that I get upset about. All right, let me just go through two quick things and then I'm going to sign off. I hope it's quick because now I'm tired. Let me just see where it starts. Where does it start? Where do I begin to tell the story of a love so true, the true love story? All right, let me try these. I think one of them's personal. But I'll take that risk. Yeah, it's not too much, so it'll be quick. I don't know. What one do I start with? Maybe this one. This might be personal. Oh, no, it's from yesterday. So this is from yesterday, that a $15 target is within the modeled range, but it's the optimistic part of the modeled range. All right, let's move on from that. So then the next one is here. All right, I wanted to point this out to you. Goldman raises its target to 5,400. And by the way, what's taken them so long? I had a $5,000 target on gold for the last 2 years. But anyway, this is the key is, I think, both in AI and the metals, there's going to be a lot of money coming around the corner when it comes. So I wanted to show you that, 5,400. All right, this guy I don't follow, but it was in my email. My email is so full of junk now that I barely, I probably get one email that's addressed to me out of 100. It's just incredible. I need to start a new email, I guess. But anyway, I saw this morning, and it describes a bit of the dynamics going on both in AI and in the commodity space. You can subscribe to him. I don't, but his name's all over this. The rundown, the great software as a solution meltdown. Dear William, I mean, it's just, I'm sure this is AI. Software as a service has been one of the hottest tech sectors of the last 15 years. Investors fell in love with the business model, and for good reason. Software as a service companies churn out recurring revenue quarter after quarter after quarter. They sell their services to businesses, and in many cases, these companies depend on the companies they sell it to, depend on the software as a solution vendors to run core functions of their business. For example, Salesforce is a classic SaaS company. They sell the customer relationship management software, which companies use to manage, track, and grow customer relationships. SaaS products often create a lock-in effect, meaning it's very hard for customers to switch to a competing product. When your whole business model depends on a specific SaaS platform, it's difficult and expensive to move to a different provider. So the best SaaS companies have always traded at a premium to the broad market. Doesn't that sound like the situation that Constellation Software could be in now? And that gives me the belief that Constellation Software could be motivated to buy the whole kit caboodle, or at least AIP, for quite a big multiple above what they paid, what they were sold for. All right, let me finish his message to you. But suddenly, SaaS stocks are crashing, and investors want nothing to do with them. And this is, again, the risk that we saw early. We did see this. It's the risk to Constellation Software, but it makes me think Constellation Software has an interest in AIP network companies. The reasons why might surprise you. So this rundown he's doing today, you can subscribe to him. Let me keep going and show you what else he says. The NASDAQ 100 remains near all-time highs. NVIDIA and other hardware companies are hitting it out of the park. Meanwhile, SaaS stocks are quietly crashing. They're down more than 20% since the summer. So they compare here in this chart the Morgan Stanley Software Index. NASDAQ is in black, but I'm feeling blue. Oh, no, what should I do? Baby's in black, and I'm feeling blue. Tell me, oh, what should I do? So NASDAQ, that's an interesting chart. It looks a little toppish to me. Looks a little toppish. But anyway, NASDAQ's up, and the Morgan Stanley SaaS Index is down. Basically, as soon as AI started really taking off, we should have been shorting Constellation Software. All right, here's a whole list of the Morgan Stanley, or some of the Morgan Stanley stocks. Anyway, Team, INTU, Now, Figaro, Snow's down here. They're all down. They're all in the red. Oof, he says. Part of the reason these stocks are selling off, ironically, is because of AI. And you all predicted it. We were predicting it. AI-assisted coding allows skilled programmers to increase their productivity by 10x. And a big concern emerging is that instead of paying SaaS vendors, companies will build their own internal software using AI coding tools. The whole platform is either being upgraded or replaced. This is the magnitude of what's happening. And it's not going to stop just because people tell you to diversify or wait 2 years or, some other thing. It's not going to change. Now, I guess the question is Railtown going to participate? My premise is yes. And when it does, it's going to be pretty quickly. But we'll see. All right. Part of the reason is because of AI. AI assistant coding 10x. And a big concern is that they're going to build the codes in-house. So the fear is that instead of paying Salesforce massive sums of money each year, companies will build their own internal customer relation management software using AI. These fears are probably overblown. Even with AI assistance, building a SaaS replacement is difficult. it needs to be enterprise grade, secure, and reliable enough to run a business on. I would argue Railtown helps here, but yes, he's right. Right now, AI coding simply isn't reliable enough. However, the market is forward-looking, so it's possible this will become a major threat in a few years. However, the other problem with SaaS companies is more immediate and serious. They have very high valuations. That is S, software as a service company, not AI software as a service company. It's interesting. Take a look at Figma. FIG, previously one of the hottest SaaS companies in the world. Figma makes collaborative visual design products which compete with Adobe. Customers love Figma, and investors did too, until recently. Figma has fallen, wow, 80% from its 25 peak. Growth is strong at 38% year over year. So the multiples shrank. Figma's share price got way ahead of its fundamentals. Despite being down 80%, it still trades at 13x revenue, which is pricey I agree with him. The company's forward PE ratio was 67, and over the 12 months last, Fig lost around 900 million at a $13 billion market cap. That's expensive, even after an 80% drop. That's why I think Constellations, that's why I'm putting you through this. I think Constellation Software is a natural buyer of Railtown, or, it'll be a three-way sale maybe. With companies like Google and NVIDIA churning out cash flow, investors are no longer willing to accept high growth stocks that are bleeding cash. Exactly. These big hyperscalers and the Googles and even Facebooks of the world, their revenue is so massive. Why take a risk in something that's not profitable? They've experienced the wonder that is high growth and high profitability. That he's talking about Google and NVIDIA, the wonder that is high growth and high profitability. I think Railtown's going to fit into that category, high growth and high profitability. And so the appeal of fast growers losing billions of dollars is fading. Short-term, FIG could rebound, but to become a reasonably priced company, either it needs to keep growing at a 35% plus clip for another 5 years, each year for another 5 years, or its multiple has to shrink. So, and then the final part of his comment is what I think our whole game plan should be about, is going from software to hard assets. The other factor playing a role in SaaS meltdown is the remarkable commodity boom that's just begun. And I had hoped to build something by now, both to help an investor and help you, but it doesn't look, we just have to start from where we are. Gold and silver are leading the way as they do, but now copper and nickel are on fire. Jim Rickards believes this is just the beginning. Some investors are rotating from speculative names. There was one guy that I talked to that has a nickel play in Europe, but I don't know. I guess just going directly. Anyway, let's move on. Yeah, anyway, I've followed Jim Rickards forever, and I've shared that with you. there's going to be a lot of people coming on into the space like they've been here forever. And that's fine. There's going to be a lot of money to be made in the metals and in the mining area, a lot. What is your knowledge about platinum and the best stock ETF for this metal? Well, I don't have a stock in mind. I'll have to look it up. But the guy here that used to come here, doesn't come recently, John Croissant, is very positive on platinum. Now that silver's run up, this easy part, I was always focused only on silver. But now that the easy part is over, I think it'll be worth looking into platinum and palladium. By the way, the gold company that a lot of people here have invested in has enormous upside to palladium and silver. But when you ask about an ETF, I'm sure there's many out there, and maybe they focus only on platinum. But if you're a trader, if you're a swing, I guess swing trading means anything shorter than long term and anything longer than day trading. It's an odd description. But I think the markets, and I never had a target for platinum, but I have now been calling for the S&P to go to 10,000, the Dow to go to 70,000, NASDAQ to go to 40,000. Russell, I didn't raise it that much. I've always had it at 4,000. But I don't remember what I raised it to, if at anything. But I think the Russell could go to 4,500, 5,000, but I don't know if that's being too optimistic. But I've had gold at 5,000 and silver at 120 for, I don't know, 2 years. But in this, I think this next leg of the bull market of financialization of everything is going to be so rapid, and it's something we've talked about, my friends and I, and analysts and technicians for decades now. I can't believe how old I am. But just what happens at the end of this bull market. And I think this bull market is largely a baby boom market. Everything. It's about baby boomers. And housing, bonds, stocks. I think Wall Street started shifting its model to just being asset accumulators based on the longer term demographics and money from baby boomers. And so anyway, all the assets that they invest in and accumulate in have gone up. It's through reinvestment, and the houses have gone up, incomes have gone up. It's been a fortunate time. And of course, there's more to it than just that. But how much longer will baby boomers keep 3 or 4 houses without starting to sell the extra ones? That could crack the housing market. But the same's true of retirement accounts. Will they continue to leave those retirement accounts alone? Maybe, maybe not. But as you get this rally, we used to, all of us, many of us, I guess, we used to follow Bob Prechter and it's 5 waves, and then it'd be 7 waves, and I think it even went to more waves than that. But the idea is this last wave in this $44 or $45 bull market is just you're going to get. I haven't looked at a long-term chart. I don't know if it'll be the biggest move, because I remember the third wave always being the biggest. But it's going to be a massive move if it's a fifth wave. It doesn't matter what it is. I'm just comparing it to that theory. It's going to be a massive move to the upside, and it could happen in 30 days. You could get 30% upside move in all these markets in 30 days, or it takes 6 months. But it's going to be whipsaw fast. And man, the news people are going to be giddy. People are going to be throwing money in. And if you got out, you're going to get back in. And it's going to take all your courage not to throw more money into it. I don't know how to play the upside. I used to know the index call options. I don't know them anymore. It might be worth trying to do that, but I would wait till the market pulls back and the premiums shrink, if there is one. But what I intend to offer as strategy when that happens, and it'll be hard to call. It'll be so hard to call. I mean, maybe it happens after the elections. Maybe AI all by itself is just going to mean it never happens, or it happens 5 years from now. But a guy that I, from time to time, take an hour to listen to his interviews. I don't subscribe to him, but David Hunter, I like him because I followed him for quite a long time, and he's kind of old school, and he sticks to his conclusions. I like that. So once you start understanding him, he's more conservative than I am. But the idea of this blow off top basically comes from, for me anyway, from the Weimar Republic, and but it also happened in the markets in 1929, and I just think that's going to happen again. Well, he kind of incongruous, not congruent to his overall strategy of technical analysis. He falls into a bit of fundamental analysis and says he thinks the global economy is going to bust up this year. Well, again, AI might stop that. All this spending on AI is a gigantic Keynesian demand increase, both from the private side and from Wall Street. All that money that's been sitting in non-productive Wall Street pools of money, a lot of it, maybe out of greed and maybe out of chasing returns, is going to start going into productive assets like perhaps AI and data centers, but also commodities. So it's an interesting thing to think about, that David Hunter could be ultimately wrong. And he's humble enough when he's asked, when people say, what could go wrong with your projection? It's that this call for a bust up in the global economy in 2026 could be moved out a year or 2 years. That's what he admits could be wrong. So I don't know how really to project it, except I think you're going to see two characteristics. It's going to go up bloody fast. Literally, I think you'll see 30% up in weeks, but it could be months. But you're just going to see it's just going to be incredible. You're going to see a decade's worth of gains or a generation's worth of gains happen in less than 6 months. And all the people who are so conservative, which I'm not ridiculing at all, but like during the Weimar Republic, they're going to be penalized. The speculators are going to get rich. It's just what's going to, it's the end of it's the latter stage of a bull market. It's the financialization of everything. And it's happened before. Maybe not with computers the way we have them today, but it's just human nature. So anyway, one sign of the top will be this huge rally, where I think I don't get how, but maybe he just mixes fundamental and technical. The technical is supposed to act regardless of what's going on. But one connection that he might be implying is that as the economy, as credit, because credit, for example, I listened to allegedly, I don't know if any of you do, but he's pointing out that people's credit lines are going to be pulled soon. It may be true, maybe not. And then if baby boomers are having trouble with their side gigs, or maybe, I hope not, health problems or whatever, maybe they start trying to sell their extra house, but then that house goes down by 30%. They say, no, I don't want to sell it. Let's sell our Fidelity IRA. And if there's enough of that, there's a cascading effect. And maybe he's talking about something like that. He is calling for very much lower interest rates, which is a daring call. And he does think, by the way, I'm sure he'll change this as it goes up, but he thinks that silver could go back to 30. I don't agree with him, but he's a lot smarter than I am. I don't agree with it, though. So the reason I'm bringing all of that up is that if there's going to be a economic bust up, I think it's going to put some financial institutions at risk. And ETFs in general are going to be a disaster just when you need them. Just when you need them. Their premise is they're buying platinum and platinum shares. But most of them, it's just paper. And the ETF itself becomes a vehicle where Wall Street hypothecates and rehypothecates the assets inside of the ETF. So when this house of cards comes down, or part of it comes down, those ETFs are going to fail you right when you need them. And yes, maybe you can have a lawsuit, but just when you want a contracyclical asset, or you want a protection against a market crash, you're going to find out that inside of those ETFs are just paper promises. So if you're a day trader or a swing trader, you can trade these ETFs and make money. I'll try to find and bring up platinum focused ETFs and platinum shares. None are coming to mind, but I'll think of it now that you brought it up. I read a lot. I'll see them. But what I would do if you're looking to invest in an ETF, there are other families out there of funds. For example, I like the now Hathaway has moved to Von Greiritz, but Hathaway used to run a gold fund. Darn it, what's the name of it? I'll have to look that up too. Right now I can't remember it. I met Hathaway. I don't know if it was on a President's Club trip or else, but I met him once or twice. Damn, what's his fund? I'm sorry, I'm having a Joe Biden moment. But he has a gold fund I like a lot because he buys the metals physically, but he also buys the mining shares. But he no longer runs it. He's over at a different fund. So I have to look it up. But in my opinion, and there's no perfect answer, but in my opinion, the best ETFs to own are the Sprott asset management ETFs. If you want to own physical silver, physical gold, and then they blend it, and I bet he has a physical metals fund, or maybe even a specifically physical platinum fund. I don't know. But I would go to Sprott Asset Management. Those ETFs, he buys the physical metal. They all come with identifiable marks, serial numbers. He posts that so you can follow it, and he stores it. Here's the one risk. He stores it in Canada. So if Canada ever nationalizes their banking system in a crisis, well, what do? I don't think they will, but I mean, it's like if you store your precious metals in Switzerland, it's no longer really neutral. And weaponry is much more advanced than tanks now. So is it really? Who knows? How about if you store it in Singapore? When China gets on the move, we take over Venezuela, Greenland, and make Canada our 51st state, and maybe go into Mexico after the cartels. The next thing, we own part of Mexico and Cuba. Does China go into Hong Kong? Well, they're already there. Do they go into Taiwan? That'd be scary. Do they go into Singapore? Who the hell knows what's coming? And then if you store your precious metals at home and you show a friend who tells a friend, and things go to crisis mode, unless you've got guard dogs and shotguns and 24/7 guards, they'll come steal it from you. If you store it in the United States and you look around at some of these storage facilities and just imagine a world where there's already very few police, but imagine a world where oil is trading at $500-600 a barrel and gasoline is $25, $30, $40 a gallon. There's not going to be a lot of police support for these storage facilities, in many cases in the middle of nowhere, or in other cases downtown where it's dangerous, or at an airport. And then you look at the guards. What's going to keep the guards on duty when a gang comes rolling in? I don't know. It's very complicated. So one way you if you're trying to protect yourself, is you have some physical hush your mouth. You store it in different places, and you buy mining shares. And like you're suggesting, you own ETFs, which you trade, but you got to beat the others out before your brokerage firm collapses. So maybe you're careful about which firms you use. Maybe you learn how to trade. I don't know. I used to, I had a dear girlfriend from Moskva, and I suggested to her that she should put her money in Russia, and I think I was right. But she didn't, she didn't. She did it here, and she's probably fine. But I wonder if Russia will be a safe place to invest. If you can learn how to invest, maybe. See, I don't quite. I can't bring myself to quite trust investing in China. I think it's a language problem, and you might say that about Russia too. And everybody speaks English that you're going to speak to. So I don't know. Maybe in Singapore, maybe you just learn to invest in brokerage firms and markets that are in the East, and they're not leveraged all to high hell by a bunch of cowboys who rehypothecate everything. Maybe. But then you balance it out. And this is another one of the things I talk about, and maybe it'll offend Donna or Eric. I don't mean it to. But if Trump believes that Netanyahu's claims that Iran is on the verge of getting a nuclear bomb, which Netanyahu has been literally making that same argument longer than Ham's been talking about finger motion. He's been talking about it for, I don't know about the late 80s, but I think since the 90s, he's been making that argument. But anyway, if we go in to attack Iran, which I hope we don't, but it'll be driven by Miriam Adelson and the bankers, the British Empire, I think, the city of London, and by Israel. Will go in. That could go into horror as China loads up weapons in Iran, and so does Russia. And I guess we have some other new weapons, but I don't think that the armada that Trump can send close to Iran is going to protect us from Soviet hypersonic missiles, or Iranian hypersonic missiles, or Chinese hypersonic missiles. And if they put an aircraft carrier and maybe the whole group under the sea, all of a sudden, I think the remaining aircraft carriers we have in the world will all return to port. And much like what Trump is doing, Greenland, Alaska, and there's Canada, Venezuela, Cuba, Panama Canal, and then there's Mexico and Central America. I'm not saying we should take it all over, but I think he recognizes it almost like a game of Risk, that North America is going to be, and probably South America we will protect, but the Western Hemisphere is going to be one power block. Asia China, Asia, but also Russia, Asia, but then Russia has the Slavophile problem. Russia is also Europe. So if Germany can get along with Russia, you're going to have that part of Europe become, that Euro-Asian area become a power center, and then China. And then, of course, over time, you might see India, Brazil, I don't know about Nigeria, but maybe Nigeria, somewhere in Africa. But for the next period of time, those are going to be the power centers. And I hope, if we can avoid war right now, I think one of the things driving what's going on with Iran beyond Israel is the British banking system. And I assume it's a debate. Who's more powerful, London or New York? But let's just say London and New York. One way to survive the stresses of all this leverage is to go have a regime change in Iran so that you put in your new regime and you immediately lend money to that new regime against their oil, ironically, maybe against their nuclear power plants. And all of a sudden, that Iranian asset base enters into the London, New York, Geneva, Tokyo, Paris maybe, collateral. It becomes part of the collateral that supports the highly leveraged Western system. I think that's ultimately what's going on with Iran, Venezuela, even all of this constant drum roll against Russia. The dream is we could bring those assets into the banking system. NVIDIA on its own is creating collateral, but maybe the whole AI creates collateral. So anyway, there is a scenario where the West can prevail, but I think, make no mistake about it, that's the battle that's going on. And if Western banks go down, your ETFs aren't going to be great. Let me just look up if Sprott has a platinum ETF. He does. He has a Sprott Platinum Trust, SPROTT. Sprott Platinum Trust apparently has a stock too. He has a Sprott Platinum ETF. That's the one I would recommend. And then he has also a platinum and palladium fund. And then he has money. I think he's the best. He's very seductive. He's like all Canadians. They can really give you a sales pitch. But I would go with he's wealthy. But I think he's not the only family out there of funds. But I really do think he is going to protect you as best he can from the underlying platinum being stolen from you. So it'll trade. It might not trade. All of his funds used to trade at a discount. I doubt they are now. I bet they're all at a premium. But, it's a different time in the cycle. Just human nature. When these things are flat on their ass, nobody wants them. When they start running, everybody wants them. It's just human nature. Yeah, that's what I would do. That would be my answer. The Sprott Platinum ETF or the Sprott Platinum and Palladium ETF. And it says here he's got a platinum stock. I don't know what that means, but he's got a platinum fund, which might be, you can go to it. His website, ironically, is sprott.com. SPROTT.com. That's where I would go. Account settings. Corey just posted something on LinkedIn. Mila raising 100 million for AI setups. I thought I read that out, but let's look at it if I can find it. They don't always let me. I mean, sometimes it asks me to sign in. Yeah, I did read that out. Quebec's Mila Institute raising 100 million for AI startups. I did read that out. But it's great, account setting. It's great. It's a great catch by you. And they're partnering with Innovia Capital. So there's two things to notice about that. Innovia Capital is active in the AI space, so they should help in that process. But what if Innovia Capital runs across an AI startup or an early valuation in an AI public company and decides to invest in it? So it's a good catch that you made. Giuseppe, good evening, William. Adding to Eric B's point from earlier, TELUS partnership tells us that Realtek is the goods. I agree with that. That's my opinion. But I don't hear as much negativity right now because no one talks to me. No one calls me. So I don't hear any negative. But that's a sign of Railtown being a very disappointing, I guess, swing trade. What the hell? But nobody can predict exactly, just like with silver, nobody could predict exactly when it finally starts to catch up. And frankly, silver could go to $250 an ounce and just be at approximately the inflation adjusted high. So silver can go a long way, and I'm sure that's true of platinum and palladium. That's why we might have to move to mining shares to get that bang for the buck. When I first invested in Dolly Varden Silver, the reason I did that at that time, the guy that brought it to me, a Canadian, by the way, very wealthy guy, introduced by a friend of mine, a good guy. We had some fun. So he made a compelling case. But when I invested, to my memory right now, I might have notes somewhere, I had, via the investment, I had 125 or 120 million, not million, 125,000 ounces of silver, paper silver. It was through my ownership of the company. But then the shorts, that whole short complex, did their work over the last decade. And there have been, I mean, ironically, the company acquired another company. The company kept building the infrastructure. They drilled every year and they found more and more silver. And so the company just got better and better and better. And I don't have those numbers right now, but I could probably do a Google search. But they just kept destroying the stock price. And every time the CEO went to market for new money, he had to issue based on the current stock price, and he kept issuing so many shares. And so they just stole so much from shareholders. So now, last time I looked, I think I had, I can't remember, nothing's popping in my head. But what I want to say is it worked out to about 700 ounces in paper. And my 300,000 shares is now 7,500 shares, which I just simply cannot get out of physical form. But that's the point. That's what they do. And it's so unfair. And that's why I get angry. That's why they come in and they get you thinking they're your friend, and they don't care. To them, it's all about making money. I don't know. I'm not going to convince people. Once people see it as childish, me against him, you're going to stop listening to anything I say anyway. So it's not fruitful. It's just too late. And that's my fault. I'm not going to blame it on anybody but myself. I'm not going to blame it on anybody. It just gets so draining sometimes, and I step too far. That's my fault. Nobody else. It's 3 a.m. Novak Djokovic plays, I think, Brian Van de Zandschulp. And this Van de Zandschulp guy beat Novak last time. So I'm rooting for Novak, the Jovac, but I'm nervous. But Djokovic has looked good so far. I watched a lot of the beginning. Do you think Tony owns it? I don't know if he does. I just saw his post by accident, by the way. I don't follow him. I might be checked in that X thing called following, but I don't intentionally go seeking his comments or anything. I really am not on a vendetta against Tony per se. Right here, my focus is I don't want people tricking investors out of Railtown. Of course, I don't have much of a leg to stand on because the stock, if you take it from a little over, November, 2 Novembers ago, it's been a disaster in that time frame. Absolute disaster. So I don't have a leg to stand on. But if the argument is that Railtown, my opinion, first in class. I guess maybe not first to market, but I would argue that's not known yet. It might be first to market in its category. We just don't fully understand that yet. And that its IP is great, and that it's just, this delay and the Thales story is just so big that I just don't want people to be fooled out. And so, I get worked up sometimes. But anyway, all I know is Tony, the piece I saw is he was talking about the short position in AMC and how they had walked it down in December. I didn't read it further than that. But what I took from it is he understands what they do. I don't think he's against the shorts. I think he's part of the shorts. But he's going to say, oh, that's not true. And I don't know that. But his message, let me put it that way, his message is aligned with the strategy that the shorts follow. Now, he may do that because he doesn't understand what he's talking about. Or he might be learning. I don't know. But for a guy to come out and attack the Railtown story so vociferously, without doing due diligence, by the way, and base it on things like the going concern clause, that's right out of the Basher's handbook. And I'm sorry, I recognize the pattern. Others may say, like you are, that he's totally against the shorts. Maybe, I don't know. If he is, God bless him. I wish he would change his message then. Why is he playing in all these stocks with the shorts? I don't know. You guys who are younger than I am probably know more about day trading and technology than I do. All this charting and all this crap. I've followed charts, but from about immediately, I've been telling everyone, GMC, AME, they're not going to squeeze. I've been saying that, whatever it's been, 4 years? I don't know how many years. I've just been saying it. And it's been a lonely thing. And I stopped because it's just unpleasant, the blowback I get. I've been saying, sell. They're just taking advantage of you. Well, I don't know if Tony sincerely is against the shorts, and he's more like that guy, George Thorogood, I can't remember his name. And they're just naively charging at windmills. Well, he wouldn't be the only one doing that. But the advice is really bad. The advice to be in the movie theater and the game control board company is really bad. To be in it for a squeeze, it's just horrible advice. And anybody that's been doing it has probably lost money. Ironically, that money they have, they probably saved themselves from doing a ZJYL or something. I'm not trying to pick on any one idea. So in that sense, they still have some asset left, but they didn't make any money. My argument would be all of those assets, every single one of them right now should be in Railtown. And then if Railtown goes to the lane chain valuation, maybe then you rearrange your deck if you really want to be back in one of these stocks. But where I've been wrong is everything has taken forever, for bloody ever, in this nanosecond time frame that everyone's used to, making whoosh, do the day trade, it's up 200%, get out, you know. That'd be nice. But my call on Railtown isn't really about getting the timing right, although I wish my urgency had been more accurate. It's more about that when the market recognizes, and I'm talking about Wall Street, Bay Street, the city, and all the venture capital firms recognize Railtown, you're going to wish that you had gotten out of the dead money of GameStop or the theater company and just gone ahead and concentrated on Railtown. And I think Tony's been totally against that message. And so at that point, I butt heads with him because he's an idiot if he's saying diversifying, and he's going to say, well, he's calling me an idiot. Well, let me come up with a different word. He's naive. He's not particularly professional. He doesn't understand what diversification means. And there's a lot of people about that, like that. He's just a retail guy making points of view look, diversification, strictly speaking, is trying to be in assets that behave differently from each other, particularly when markets are under stress. But if you own the movie theater, if you own the OBPH or whatever he says, if you own the GameStop company, if you own, even for that matter, Railtown or Silver, and the markets are crashing, everything's going to be going down at the same time. The argument I have is Railtown's a real company with the wind against its back. And there's no toxic financing. There won't be toxic financing. And as long as the company is talking to naive guys that share information with shorts or complicit guys that share information with shorts, it opens up an area I don't trust. Just like if NextBridge is talking to Double D, it scares me that they're going to take advice that they should start trading in the public markets. And then the jig is up. I don't know all the strategies and tricks. I just recognize the basher's message, the manipulator's message, and it could just be naivete. It could just be he doesn't know what he's talking about. It could be that. I don't know. I'm tired of, if you guys think he's a great guy, go listen to him. Just recognize that one of the ways to suck you in, if he's carrying water for that whole complex that just destroys market caps, is to come on like a friend. Hey, I'm in it with you. I'm long. Yeah, I talked to the CEO. And then when the stock is up, I don't know, to $2 and the maybe there's some pressure going on, he can go to this audience, which he didn't start, by the way, he did not start, nor has he built it like you guys have. But he can go to the audience and say, hey, I gave you the advice. Why don't you get out? And maybe he gets it. I'm not saying it's he, but there are people out there that do that. They get you to sell, they get a payday, they get a kickback for helping the complex. And you guys don't see that threat with him, I'll let you trust your own judgment. I see that threat. I could be wrong, but I see that threat. And it's not personal. It's a threat. I haven't seen anything in his advice or his knowledge base. Even after he gets off a pretty kind effort by Corey to talk to him, he says, I'm going to stick with my own DD. Why would he do that? To create doubt. It's all about fear, uncertainty, and doubt. Get you to do something else. Get you to be hot with him. I'm trying to tell people not to move from one of these stocks to the other, to the other, the other. I'm asking you just get the hell away from them. Focus on Railtown. I would be talking about silver if I hadn't found Railtown, by the way. And I'm not taking credit for finding Railtown. I'm not. This is not about me. And I'm sorry Railtown has taken so long. But I think you can take your small account, or if you have a big one, you can take your bucket of all this speculative stuff. And if you're not listening to what I'm saying, maybe I should put it another way. And he'll ridicule it because maybe he doesn't know what he's doing. Or maybe he thinks it's impossible. Maybe he realizes I'm ridiculable. But I think your first move in Railtown is 26x. That's a big number. And then it's conceivable that it's 10x from there in a bidding war. In a bidding war. I mean, there's some assumptions. But you got 20x and 10x. Let's just see what that is all in. And it is exactly as one would expect. It's 260x. Why would Tony be talking against that? I don't know. I'm not saying this is definitely going to happen, but this 26x is just catching up with Lang Chain's last summer's valuation. This 10x is in a bidding war, which you can come to those numbers based on revenue. You don't have to do it comparing it to Lang Chain. That's 260. That's a hell of a... And my point is, if you can stand it, to put all that Mared bucket into Railtown, you get that kind of return, which I can't. Look, there's two risks to it. One, I guess, is recoverable. The other really isn't. They're both related risks, and I'm being on the bullish side. One risk is that the company sells too early And I'm starting to think that's what's going to happen. They sell at $10 or $15, maybe $20 a share. That's one risk. So that means this 260 doesn't happen. But let's say they sell at 25 a share, that's 100x. Are you going to get that in AMC or any day trading? You don't have to day trade to get that. You buy the stock, and maybe you don't sell. He ridiculed me for that statement. You guys think I'm the ridiculer, but he ridiculed me for that statement. But if it's bought out, why would you, let's say you do get this magnificent number, and I'm not promising it. Why would you sell anyway along the way if Microsoft gets in a bidding war and pays that much and you get stock without having to pay taxes? You get that bump up or some lower bump up without having to pay taxes. It's a one decision stock. But so one risk is they sell too soon. But a related risk, the second risk, is they sell too soon to a big company, a big ass company like NVIDIA or Microsoft. If they sold to a $4 trillion company, how much would it be at I think it's 11 billion? No, it'd be 14 billion to get the 260x, be 14 billion buyout, which could happen. You have to admit it's on the optimistic side at this point, but it could happen. 14 billion by Microsoft. Well, Microsoft could buy the company and bundle everything in there. Microsoft is something like 95% of the world's software tools. I mean, they're essentially a monopoly worldwide. They could just bundle it in their packages everywhere and turn that 14 billion into a valuation internally, maybe of $1 trillion, or blend it with some of their other stuff so it adds $1 trillion to their market cap. Ceteris paribus. But anyway, what does that do to you and me? I mean, that would be great, because if they bought it there, we'd get our huge multiple in stock. But what if the company, if they bought Railtown at, I don't know, $12 a share? That's nice. It's fantastic from here. But the move from 12 to, let's say, $60 isn't going to happen in Microsoft. I mean, it could happen inside of Microsoft. So Microsoft's market cap expands and they can brag on it. But I don't think you're going to see these huge multiples in your investment from there in Microsoft. I mean, you might get a 30% move. So that's the other risk. So a lot of these things we just don't know for sure. But I can almost guarantee you that not because he's choosing those 3 stocks, his 3 stocks, the other dozen stocks you hear of, I'm not picking on any one person. The whole kit caboodle of these manipulated stocks, I can almost assure you, you'll either lose your money, unless you're pretty sharp trader, or it'll just be dead money. And I think Railtown gives you a chance to make back your MMTOP, make back your logic, make back your CRTD, make back your MMAT, make back your COSM, make back your GTII. I literally think with Railtown, you could sit down and write down what all your losses are. Pick a number. Maybe you don't want to go to 55 like my target is. Maybe you pick 25. Maybe you pick $15, which unfortunately, at this point, I think $10 to $15 might be our buyout target more than my higher numbers, because we're already into February. Anyway, let's see. Let's let it play out. But pick one of them. Pick $10. Pick $5. So write down everything you lost. Let's say you lost $350,000. And you divide it by 5. So you have to have 70,000 shares of Railtown. So you multiply that by 0.25. Costs you $17,500. Admittedly, you have to put more money at risk. So if you add the 17.5 to the 350,000 you lost, you're at 367.5. You divide that by 70,000 shares. You want $5.25 a share on Railtown. And then if you get conned into selling out, and it might be the right thing. Frankly, we don't have all the information. But if you get conned to getting out because a win's a win, you never go broke taking a profit, which is all crap. Yeah, you can go broke. You take it too soon, and it doesn't make up for your other losses, and then you start spinning the dice again in other crap stock, you're going to lose it. This is not about gambling. This is about a strategic, yes, speculative, but I think it's you're catching an industry, a platform transformation worldwide, government focus on it. You know the story and you can buy while others that know it can't. So anyway, in that little scenario I gave, at $5.25, you get your money you put in to buy the shares, and you get everything you lost back. You know, again, I was saying if you lost $350,000 and you targeted $5, so you had to buy 70,000 shares. And then you have to go back and add back what you paid. So it's $5.25. Well, lo and behold, if for some miracle in 45 days, there's a buyout at $10.50, not only did you get your money, all your losses back, you doubled it. And if there's a further miracle, and let's say the bidding war takes it, I don't know, $15, $20, $25, you might have trebled your money for all those losses. That's what I'm talking about. And that's why I get so upset. Because people who were conning you into trying to make money day trading are either fools, they actually believe it. That makes them fools, in my opinion. I've never seen any day traders make money in the long run. Doesn't mean there aren't some. But even Stevie Cohen, who supposedly got started by great trading skills, I think the evidence is out there he always cheated. He certainly started cheating when the monies got bigger, according to evidence out there. I can't say that I have proof, so I guess it has to be in the category of opinion and editorial. But I don't see Railtown as a day trade. I don't see it as a one of 4 stocks or 5 or 7, or if it runs, then you go over to Frank Benedetto's new stock. I don't see it as all that. These guys are getting paid, just like Tony. Next company that comes along, I don't know if Tony's in that business, but he'll say, "Hey, I was part of. I raised 15 million shares of Railtown." Maybe he'll say that. That's how I see him. Maybe he's honest and he'll say, "I just bought some." But you guys did all that work, not he. But he'll get a contract on another deal. He might not be in that game, but Frank Benedetto is. Frank Benedetto will come tell you, "I was early on Railtown and it's all blue sky." But I know that Railtown didn't pay Frank Benedetto. I don't think Railtown's paid anybody. But maybe I shouldn't say I know, but I should say they haven't paid anybody. So ipso facto. So he moved on to other things where he can get stock and cash, get you to buy it. Then they do a deal, he gets out, and hey, he's got a family. But you want me to be nice to all of that? I don't know. It really pisses me off. You guys are prey. Prey. You are prey. You are manipulated. You are used. You are abused. So a handful of guys who no longer have a job on Wall Street, and Wall Street's completely changed, can get a 3-month, 6-month, 9-month contract, 15 grand a month, 20 grand a month, 25 grand a month, and then get a bunch of stock that they can sell. Free trading stock. It doesn't sound like anybody's looking out for you. As insane as it sounds, I'm trying to look out for as many people as I can keep here, even though they get pissed off because I'm trashing women, which I'm not. Even though I speak ill of Zionists, therefore I'm anti a certain religion, which I'm not. After all, my religion is founded on that religion, so I'm not. Even though you're acting childishly against this great guy, this paradigm of talent and brains and experience. Well, I don't know. I really don't want ever to deal with any of these people ever again in my life. Any of them. But for the time being, I'm staying in with Railtown and with you, even though I wanted to walk away so many times because some of this criticism tonight, it will hurt. And some of it gets through. Personally, I'm not such a tough guy. Things don't roll off my back. But I really feel like maybe it's not for everybody here, but I am fighting for you. That's all I'm doing. And when other people go to endless meetings about MMTOP, it's not that not on their side. I did all that. But the way I see it, the best way for you to make your MMTLP back is not through Mark Bazile or any of the attorneys. I'm not trying to pick on one. The best way to make these other stories that you're angry about back is not through Congress or the SEC. To me, the best way to make it back is let all of that go. And in my case, I got such a tiny account. But you got to start where you are. You got to start where you are. No one's going to help you. No one. Not Congress, not the SEC, not FINRA, not Due Diligence, and I submit to you, not Tony Romero. But through, I wouldn't call it providence, but maybe you would. And by the way, we've paid our dues. This hasn't gone the way I thought it would. It's taken a long ass time, and that's been punishing. But at least our shares haven't expired worthless. At least our shares are not being destroyed by toxic financing. But it's been, I have to admit, I've been wrong to have been excited over a year ago, to have been excited in June. I warned you about August. Yes, to be blunt, I think I warned you about attorneys who were both young and female, but that's trashing women, so I shouldn't talk about that. But interesting, no one stood up for Dr. Tom Core, who's a white male. And I pointed out to you he's a professor, but I guess I'm not trashing him. I'm not trying to trash anybody. I'm trying to tell you the characteristics, trying to see all angles of what you have to deal with. So I predicted, of course it looks embarrassing now, but I predicted those attorneys, those regulators wouldn't get anything done in August. I was right. Of course, they didn't get anything done in September, October either. So I was wrong. I was wrong about that. But when you have evidence and you try to make calls and you try to explain why, you're told, oh, you're trashing women. And maybe that's how it comes across. Or you're told that you're acting childish when I warn you that Tony speaks from the Basher's Handbook and he uses the Basher's strategies, just like Due Diligence. I would say Due Diligence is probably more intelligent. Doesn't make him any more right than Tony. But with Railtown, because of this very system, because of the corruption, because they use computers set to read headlines, the Benghazi angle, because the company, I think out of genius, started early for just this scenario, we're in a perfect storm. According to one article I think Ward gave, or I gave to you, $75 trillion. 75, that's with a T. I think that's 3/4 of the global GDP is going to be spent on AI. Which when you think of it, if it doesn't work, that's going to make gold and silver go up. My other favorites. But because those two geniuses got started early, and then because they needed to raise money, they went public. And then because in Canada, they destroy junior companies who need capital, the criminals do. And then because the company needed to raise money, it doesn't matter what the story is. All stories, they love good stories because that brings in buyers that they can steal from. And then that because they needed to plan ahead and try to raise money, they started trading on the over-the-counter market. But then ChatGPT came. And then they went on their campaign to commercialize. And then they ran into AIP. Which may or may not have led to TELUS. It's unclear. But they'll probably get, when you think about it, they'll get what they paid for AIP. They might get that back in 9 months in cash revenue. And then it might last for 25 years, 30 years. So there's a perfect storm here where the system has worked in your favor. And simultaneously, the company, a couple of genius guys, a whole bunch of people, the engineers and good, hardworking people, Paul Woodward, Rebecca Kurzweil, Dr. Elliott, the AIP people, I've said their names so many times. All these hardworking people with the strategy, it's come to fruition just as Wall Street, as I and we projected, is going to put hundreds of billions of dollars into these type investments over the next few months. And in all of it, and of course you guys say Tony was right, that it's a going concern. So we'll give him credit for that, I guess. I mean, it's not like I didn't show you that, but it's just so standard, guys. It's just so standard. But the company isn't going to do toxic financing. And in the middle of all of this, unbeknownst to anyone, they signed a gargantuan deal, potentially, we got to say it's potential, with one of the 3 largest hyperscalers, telecom, internet companies in Canada, a country where, by the way, if you want to have internet, you got to use a Canadian company. And a company where, by the way, if you want to use supercompute in a data center, sounds like it's leaning towards you got to do it in Canada. And a country where they're trying to build the AI stack in Canada, and that's TELUS. Of course, it's NVIDIA and HPE, but you're not going to get away from that. But it's the TELUS stack. And then it's probably going to be Cohere, wouldn't you think? But we don't know. It could be Cohere, OpenAI, Anthropic in that next layer of languages. And that layer of languages, the more you read about it, that might be in play a little bit. There might be, but it doesn't matter what's there. The next layer, whatever you want to call it, ADKs, agentic tools, AI, SaaS, orchestration frameworks. That next layer is Canadian. It's Railtown. And I think it's better than LangChain. But even if it isn't, what a niche. What a moat. Canada. Canada. It's pretty powerful. And if they prove the concept there, the upside's pretty big. So I think because of all that, even though it's taken so long, and it's been painful for me, and I've lost a very dear friendship, and I've lost time, and I'm struggling here right now, and I probably should be doing something else. But I don't think it's fair just to, out of childishness or trashing, to shut down and leave women who are invested hanging in the wind. So I think that shows my commitment to women, by the way. And I think it shows that I'm not being childish. I'm standing in until this has its own legs and you don't need me anymore. Although at that point, I'd love to see if we can build something to take advantage of the next time ahead. But I haven't locked any of you into that. So I'm sorry, I don't think I'm being childish. I don't think I'm trashing. I think I'm trying to do the right thing. But hell. Let's finish on a lesson. Let's try to teach you something. And me, because I can't remember. How about this? I'll read you this. Page 100 of Mike Maloney's book. His chapter is called Then versus Now. So now let's explore the vast differences between the 1970s gold and silver rush and the great gold and silver rush of the 21st century. Now. Because if history repeats, always repeats, but with little twists, it is understanding those little twists that can give you a glimpse into the future. The transformations we've witnessed over a mere 5 decades are absolutely astonishing. My adult life. And I believe these are the factors which will cause gold and silver prices to soar to unimaginable heights. All right, let me go right into it. He gives a summary. He tells you what he's about to tell you. So let's skip that paragraph. He says gold and silver are different from all other asset classes. So he spent a lot of the last chapters talking about central banks and governments' demand for gold and silver and some other things. So demand for gold and silver, he states, is set to rise exponentially. And you're seeing that. But he wants to talk to you about the supply. What's the supply of gold and silver to meet that demand? So what about the 70s versus now? Back in the 1960s and the early 70s, there were few gold miners. The Bretton Woods monetary system mandated the price of gold, and they held gold prices at $35 an ounce until the president changed everything in August of 1971. He looked at the gold standard and he said nix on that. So as for silver, silver's price has been suppressed, was suppressed until 1965. Because silver coinage specified a price of $1.29 per ounce. That was the face value of the silver. If the price of silver exceeded that, then coins were more valuable if they were melted down and poured into bar. This is why silver was removed from U.S. coins in 1965. They did that to keep U.S. coins in circulation. By replacing our silver money with currency, tokens made of worthless base metal, it removed the profit motive. This prevented the public from melting down all of the U.S. coins and selling silver for a profit. He talks about Gresham's law. I hope he doesn't talk any more about it. Gresham's law is just that bad money chases out good. Silver and gold are commodities which are priced in paper currency. If you expand the currency supply, lowering the currency's purchasing power, but simultaneously do not allow the price of those commodities to rise, then shortages will develop. It's guaranteed. There's no other outcome. That's, you know. If the price of something is held low artificially, then it's not profitable to produce it. If it's not profitable to produce, no one will produce it. Until August 15th, 1971, the Bretton Woods system had fixed the price of gold at $35 an ounce. This artificially suppressed demand. So when President Nixon ended the Bretton Woods system, the price rose, which increased investment demand, which caused the price to rise further. New miners came out of the woodwork. Everyone wanted in on the new gold and silver rush. Since then, mining activity booms when prices rise, but mining goes bust in bear markets. What's coming ahead? He has a name for, and this is it. He says, as the great gold and silver rush of the 21st century unfolds, explorers and developers will once again proliferate. Or will they? These endeavors are capital intensive, which is all going to AI right now, and seldom rewarding. The path from discovery to production took 5 to 8 years in the 1970s. Today, it takes more like 10 to 20 years. Which, by the way, in your little gold company, we've already been through 15 of those 20 years. I would argue we've been through 20 of those 20 years because it was either 2008 or 2009 that they raised money, but they started earlier than that. So I don't know. The cost of these projects, mining projects, has ballooned to hundreds of millions, if not billions of dollars. That's right. Not your little gold company, by the way. Not for us. Somebody will have to come in and spend 100 million or more to build the plant. But that's all project finance. And I know I can go get that. So now the cost of projects has ballooned to hundreds of millions, if not billions of dollars. And that's for the easiest to reach deposits, the highest grade deposits, the deposits which contain the most ounces, and the deposits located in politically favorable jurisdictions, which all describes our project. This limits where miners will even go. The hard facts are these. The number of large deposits discovered in each decade from the 1970s through the 1990s included at least one 50+ million ounce deposit and at least 10 30+ million ounce deposits. So for every 10 years, from 1970s through the 1990s, the discovery of gold and silver included, and I think he's talking here about silver, included one 50 million ounce deposit and at least 10 30 million ounce deposits. But since the year 2000, the industry has found no 50 million ounce deposit, no 40 million ounce deposit, no 30 million ounce deposits. By the way, your gold company could blow all of that away. Now we are finding just a few 15 million ounce deposits instead. In fact, it's becoming increasingly difficult to find a deposit of just 1 million ounces. In 2018, Goldcorp Chairman Ian Tefler predicted, quote, "We are right at peak gold here," unquote. Production has been declining ever since. So he was talking about gold deposits. The situation in silver is even worse. Where have all the miners gone? Gone to, how does that go? Gone to something everyone. A few years back, this one guy here noticed, I've said it to you in the oil and gas, the majority of geologists and mining engineers were between 50 and 80 years old. Everybody goes to school for finance, and finance is just a leech, a tick on the world. Who will take up the slack once this generation hangs up their picks and shovels? Who will take their place? The glamour today is all software development, artificial intelligence, social media. Nobody wants to get involved in dirt. By 2024, a third of mining and geological engineers will retire. Imagine if the tech industry lost a third of its engineers. Or if a third of the oil industry's engineers called it quits, which I think will. Both sectors would be devastated. This is what's happening in mining now. This was written in, I don't know when it was written, but it was published in, it was printed in Canada, but it was published in 2022. So it's 4 years old, I guess, at this point. 3 years old. The number of accredited U.S. mining, engineering, and mining technology schools is down to 13. In 2020, U.S. schools awarded 199,790 engineering degrees. The number of these grads who were mining engineers out of 200,000 5 years ago, 327. 300 out of 200,000 were mining engineers. So when demand for gold and silver surges, there won't be enough new ounces to mine, nor enough miners to dig them up, nor enough schools to educate a new generation. In short, it's impossible to fill the future demand at today's prices. Something's got to give, and that something is price. Then he talks about manipulation. I'm going to skip that because I'll save that for another time. But silver and gold are manipulated more than the stocks. And the price is set on the margin by those cowboys. I'm going to skip that. This is an interesting point. And maybe I'll stop on that one. So who sets the price of gold? Gold's worldwide spot price is set each morning by professional traders dealing in futures contracts. When the 1970s began, the only major exchange in the world was London, England, not London, Kentucky, London, England. And then the United States joined the gold trading party once it became legal in the United States to trade gold in 1975. How many exchanges, investors, and professional traders do you think there were in the state-run economies of China and the Soviet bloc in 1975. So when the 70s began, the only major exchange in the world was London, England. And in 1975, the United States joined. How many exchanges, investors, and professional traders do you think there were in China and the Soviet Union in 1975? The last time gold and silver got hot to trot. You want the answer? Zero, zip, nada. At the time, those countries represented more than a third of the world's population. How many traders and investors do you think there were in the third world in the 1970s in gold and silver? Well, there were quite a few, but not many, not many. And even if somebody in a communist country bought gold on the black market, or someone in the rest of the third world scraped up enough cash to buy it from another individual, it had absolutely no effect on the worldwide spot price. This is in 1975. So the answer is the only people who could affect the price of gold were those who could access and legally purchase gold on an exchange. And that at the time was just a tiny percent of the world's population. That was Canada and Western Europe and Australia after 1975, and the United States after 1975. So all of Central America, including Mexico, South America, Africa, the Middle East, India, China, Indonesia, Malaysia, Russia, it was illegal to buy gold and silver, or they were just too poor in 1975. The difference between 5 decades ago and today is nothing short of astonishing. Gold is illegal to own in one country in the world today. Just to remind you, between 1970 and 1980, gold became legal to own in the United States, Canada, Portugal, Spain, France, the UK, Sweden, Norway, looks like Finland, Italy, Germany, and Australia and New Zealand. And I left out, there's some small countries in Europe I left out. It's so small. In all the rest of the world, it was either illegal or the countries were poor. Today, there's one country that does not allow gold ownership. North Korea. In the 1970s, close to 90% of the world's population was excluded from the gold and silver rush in the 1970s. Today, people in India and China buy more gold than anyone else in the world, and gold is now being traded on numerous exchanges spread all across the globe. In fact, the Shanghai Gold Exchange in China does more physical delivery of gold than any other exchange in the world. Whether you work at one of the Rolls-Royce, Ferrari, or Lamborghini dealers in China, or you're a coder in India, or one of the rich bankers in Russia, or the millionaires in Colombia or Peru, you can buy precious metals with the click of a mouse or a tap on your cell phone. The populations that could affect the price of metals in the first half of the bull markets of the 1970s were the 187 million people living in Western Europe and Canada. That was 5.1% of the world's population. Then in 1975, the United States joined the party and Australia joined in 1976, so that by the time gold and silver peaked in 1980, the total population of potential buyers was 442 million people in the world. That was twice as many, but it was still 10% of the world's population. Today, we live in a world where most of the planet's 8 billion people are free to buy gold and silver 24 hours a day, 7 days a week. Put that in your pipe and smoke it. The result is that today there are 41 times as many people who can buy precious metals today than in the early 70s, and 18 times more than in 1980. Everybody on the planet will affect the price. This is why I just screamed about silver at 20 smackers. But it's now 100. All right, we'll leave it at that. And we'll consider that I finished with a little education. Oh, I gotta, why do you think the shorts despise them? I have no idea. If you say so. I don't believe they do. But all right, if you say so. When did he ever attack rail? Well, I don't want to show you because it's childish, but right away, early and often is the answer. He attacked Railtown early and often. I have copies of some of his posts, but I don't want to go back through it. Anya. I think you should talk to him because I think you'll agree on a lot of things, but he does recommend to diversify. What do you, look, are you young? Are you inexperienced? What was that album? Are you experienced? Do you know what diversification is? Diversification is owning stocks or owning gold, or owning a house and owning a business, owning CDs, owning some blue chip stocks. That's diversification. Owning a dozen or 20 or 4 small cap stocks who need to raise money on the North American markets, not only is that not diversified, it's owning 4 sheep who will first be shorn, and then they will be put on a rising escalator into an abattoir and sacrificed one by one to the altar of profits for a handful of men in North America and Germany and elsewhere. So the diversification that you're talking about in these kind of stocks is simply hoping that the butcher only selects 10 out of the herd at any one time, and you live. It is not diversification to own the 4 stocks he talked about, except for Railtown, I believe is different. But that wasn't his idea. Anya, Railtown was not his idea. He came to Railtown because he shat all over me when I started talking about it. That's just factual. That's how he came to it. You have to diversify. Yeah, I think you should own gold and silver. You should have your own home. You should have some cash in the bank. But if you're talking about these speculative, high-risk, stock manipulated, catch a squeeze plays, that's not diversification. In my opinion, that entire bucket should go into one stock right now, and it's Railtown. Now, he's not going to agree with that because it doesn't serve his paymaster's interest. They want you thinking that you've got to hop around all these crappy stocks so you keep your money in play. They need your money in play. They need you to be hot money because it's the only way they can confuse the computers. And when it goes up a bit, they can short it back down. They need you so there's something to steal. Otherwise, these stocks sit flat on their ass. Don't confuse these stocks as a real investment, except for Railtown. And I'm sure there might be some others, you know. There used to be mining shares. They're probably all up now. But in general, I'm talking about. You don't watch them. I don't watch them. So how do one look? People have sent me things. I don't know if the other day I was trying to find information on a post for a write-up I was trying to do. And when I went on Twitter, which I try not to do because I don't like getting caught up in those conversations. So it's just self-awareness that I don't do it. I saw his post. I don't think I bothered to copy it, but he was having some sort of call on, or some sort of gathering on 4 stocks. It was AMC, GME, and some OPPBF and Railtown. And I assume his message on Railtown, I'm long, I've done my own DD, had a chat with the chairman, and just plan on 2 years. Well, if you follow that, you're not going to buy enough, and then you got to right size your positions. These other two stocks are crap stocks. It's not diversification to take your money from a diamond and put it in a bunch of putrid stocks. That's not diversification. I'm sorry. So don't bring bumper stickers to an adult discussion, I hope, on investing. The point is you don't want to be 100. I agree with that. But if you think AME and GMC are not speculative, I think you're fully immersed in the Kool-Aid. It's the only thing they are. I mean, here's the recent article in the Daily Mail. Here's your goofball CEO of GameStop. GameStop to shut a fifth of its 2,000 stores. The retailer will be left with fewer than 2,000 stores. Anyway, I don't want to get into it, but those are speculative stocks, and they're not going to go anywhere. And Anya, the thing that I don't think people are getting, when I talk about how the market is likely to have a blow off top, this is all over with. This day trading and all this speculative crap, it's all over with. You don't have the luxury of time. That's my opinion. You don't have the luxury of time. And I think the market, after it meets those highs, is coming down 95%. Now, maybe that should be measured in the terms of the price of gold. I don't know. I don't think it'll stay down. It's gonna be unlike anything you've ever experienced before, or I've ever experienced. I experienced it a couple of times. That, oh my God, but it'll be like it'll change at least one generation. It may change 2 or 3 generations. And all this hot stuff will be over. No one will be interested. So I think it's a luxury that you don't have anymore. And I see Railtown. Did you say you own a lot of Railtown? I own a ton of Railtown, by the way. Good for you. Good for you. I don't know why you're diversified in the others. Why don't you do something for me? You don't ever have to share it with me. But tomorrow morning when you're having your coffee or saying hi to your dog or cat, just pull out a piece of paper, one column, write down the names of the different companies you own, and you can mark them if you think they're high risk or speculative. You do it yourself. If you consider the movie theater non-speculative, you got maybe we have different definitions. But anyway, write them down and then put the price and put the market value. And include Railtown. And then on a separate piece of paper, write down, you don't have to do the trade, but write down what would happen if you went to zero on all the high risk, speculative, and these meme-ish manipulative stock. You went to zero and bought Railtown. Just write down what would your position in Railtown be and how many shares. And let's see where it is, let's say June 1, where that portfolio of stocks are June 1, and where the Railtown is all on its own June 1. Let's see. You don't have to do the trades, but just write it down so you have it to look at. And we'll see what diversification did to you. I'm not saying there's no risk here. I'm not saying it's not speculative. But you got to get rewarded for your speculations to make up for the crappy ones. If you're always in crap, your performance is going to be mediocre. And you need exceptional returns to make up for mediocre. You just do. I don't know how old you are. I don't know your experience. But when I was your age, I read everything, studied everything, trained with the best. I had the best training on Wall Street. And at that time. And I'm trying to remember. I want to say Jeff O'Neill. It's not his name. William O'Neill. Newspaper. He created the Investor Daily. You should read and listen to the things he said then about diversification. If you want to stay, just where you are, mediocre, go ahead, diversify, particularly in all this crap. But if you want to try to break out, you have to concentrate. And nobody can pay attention to that many stories, by the way, unless you're looking at charts and counting. I find it difficult to closely follow more than a dozen or 20 stories. And even then you fall behind. So I wrote it down for everybody, Anya, but you obviously have a big account and you say you own a ton of Railtown, so you're probably set. You don't need to do anything. But I think Railtown, for most people, maybe you're happy with the performance of your account. But most people I know, I spend a lot of time walking Congress and on the phone and on space calls. I don't get on anymore. But listening, even this last thing, people have lost family members, time, money, health, lives. And they're not going to make that back spreading their ideas across a neophyte like your friend's recommendations. He doesn't know what he's talking about. But on the other hand, just because you know what you're talking about and have experience doesn't mean you're right. Nobody is guaranteed to be right. And I've certainly been wrong for the last 8 months, particularly, and really wrong for also for 13, 14 months. So I can't do anything about that. But I can't, just because the heaviness has destroyed the price, I cannot bring myself to change the premise of this investment. And until the premise and the theory changes, I'd like to see the results. I can't give up on it. And to go into cornball ideas, I don't think that's diversification. But I have to admit, every time I hear a new idea, I'm skeptical. I've been that way since I I worked at Merrill Lynch. I've heard more come-ons than a beautiful woman from CEOs and wholesalers. I've heard it all. So I've got pretty much, I'll listen to something else. But every now and then something breaks through. And I always give it another chance. And if someone's sitting there, I give them time. And if it's on the phone, I give it time. And if it's sent to me, I at least read it. So, you know. I'm hopeful that when we succeed at Railtown, I'm hopeful that your friend Tony doesn't take a lot of the shares away. He may. He's going to be peacocking about how great he is and how this is his position, which is fine. Whatever. He's a young man. I don't need all that. But I'm hopeful there'll be enough people that we can build something, and maybe we can start, maybe have investment committee or something and start allocating to several plays. But I don't envision any of these stocks to be part of it. I do envision mining and oil and gas, and I'm now, look, when the PC came in, I foolishly just did not buy software. It was so clunky. I hated my computer Fortran class in college. I didn't buy. I was stupid. If I'd put everybody, and I also raised money for a few of the initial technology, and none of it worked. But if I had just built positions in Microsoft and then Apple and then a couple other things, you know, but I didn't. I was stupid. That transformation, I did some trades. Of course, I had traders, but basically missed the whole thing. Internet, I got more involved in. I was out raising money, and then the crash wiped out a paper fortune and closed the credit markets. And I mean, I was even so stupid that I listened to a dear friend of mine who's a great, when he gets enthusiastic, and he said, "Oh, you got to own this, 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 and this." So I took my last cash. I don't remember how much it was. Back in 1999 or 2000, the first quarter. I don't know. It's probably between 100 and 200 grand or something. But I put it all in his stocks. They're all the dot bombs and the high-tech stocks. And wouldn't you know it, I bought them, I think it was in March. I bought them right at the high. And all of them, and you talk about diversified, I was in 5 or 6 of them, to my memory. Oh, diversified. They all went down together, all of them. There's no diversification. And that's before the criminals had this control of the market. That's back when you had physical shares. But what I did, I did get it all back by, I just was brutal. I didn't care about the names. I didn't care about any story. I just started selling the close month call options against all of the positions. So I started bringing premium in each month. And then if the stock rallied to where it was exercised, I let it be exercised, or I might buy back the call and sell the next short one, the same higher price. But I let it be exercised, and I'd buy it back and do it again. Anyway, I did that all through the summer. I just kept selling the call premiums, and the stocks naturally rose a bit too. And I think by September or October, I had all my money back and I got out. So, you know, I don't buy that bumper sticker argument. I just see it as a basher's handbook, as a fear, uncertainty, and doubt. It's all about getting this group of investors to see Railtown just like any other piece of shit stock and to see it as a trade. I'm telling you, Railtown isn't a trade. And he made fun of that, by the way, when I said it early on. I said, you may find out that when the stock goes to $5 or $8 or $10 or even $15, you may not want to sell it. He made fun of that. I stand by it. You may not want to sell it. Because if the reason it's gone up is because institutions have bought, if you sell, you may not be able to buy back. He made fun of me for that. And his Platinum Blonde made fun of me for that. Because they don't understand it. But the thing is, this hypothecation and rehypothecation and endless printing of stock that doesn't exist will stop or be severely curtailed when one or more institution comes in and puts their research analysts on it, puts their trading desk on it, and puts a commitment to buy 5 or 10% of the company. That selling will stop. And then if you sell out trying to day trade, you sell 40,000 shares at 15, hoping to buy it back at 12. Maybe it pulls back a little bit, but you might, and you get a little bit off, and then it goes to 15 and a half. Say, I want to buy my position back. You sold 40,000. There might be 3,000 available, 2,000. And Platinum and your friend giggled about that. Yeah, right. They don't get it. But we'll see who's calling it. South Comfort. Hi, Dad. Hello, son. That's a nice hello. Thank you. I hope you're doing well. I hope the new year is doing well. I don't own AMC. Well, I think that's good. I own RTX and V, stuff like that. Well, believe it or not, you got me. I don't know what RTX is. That's a good one. You're right. That's diversification. That's diversification. That, Anya, is diversification. So I give you credit for RTX. I don't know anything about it, but it's a defense stock, so I would assume it's going to do just fine. So good for you. That's a good one. And then you have V. I don't know where that's trading. Wow. What's the high? I don't know, Anya. I'm probably wrong, but I would tend to get cautious on that because, well, I'm looking at a small chart. That chart doesn't look good, but it's a very small chart, so I could be wrong. I think they're going to be writing off debts and curtailing credit lines And that's a way of protecting against losses, but it also reduces the leverage they have on their loan books. So I would assume their earnings will come down. But it's out of my, I don't know Visa or MasterCard that well. So I do give you credit. You're correct. That is diversification. I have a friend who told me to buy Amazon way back. I'm talking 20 some years, like about 20 years ago, maybe a little bit more than 20. By the way, she also told me to buy Visa. I think it was Visa. It might have been MasterCard, but I think it was Visa. And I was all skeptical then. My gosh, if I had listened to her, those would be the only two decisions you needed to make, you know. Anya, I'm almost as old as you are, but not quite. Good. Good. You still have a future. You still have a future. Yeah, I don't like that chart on Visa. I don't like it at all. But it did this, well, that's interesting. It did this same pattern in during the pandemic. And then it recovered. So it's probably all right. It's probably all right. It's a huge company. And you know, even in a recession, everybody's going to use their debit cards. So it's, I mean, I don't know. I don't know anything about it. I don't want to be telling you what to do with it. I mean, I will, just out of interest, look at a better chart. And I'm not a technician. Ooh, it hasn't been a very good year. It broke down through everything. Let's do a longer than 1 year. I can only go to 5 years. Oh my gosh. I don't know. That is a stock I'd set a stop limit, a stop loss order in. You've already given up recently from 360 to 320. It's got a little bit of a bounce. There's a gap to fill at 290. Oh God, I don't know. You got to ask somebody that's a better technician than I am. I don't like that chart, but that doesn't mean I'm right. It doesn't mean I'm right. There might be support in there I don't see. There might be. Look, it's done this before. It's bounced off the 200-day before, but in November, December, even October, even September, it's gone well below the moving averages. And then it bounced up, I guess, end of December, beginning of January, if I'm reading this right. But now it's back down again. I don't know. You know what you're doing with Visa. Let me see what APA is doing. APA. Yeah, I would buy APA instead of that. Or if you just want to buy the best, simply the best. Oh, they changed their name. Symbol, I mean, they didn't change their name. I remember all the symbols from when I was a hotshot. Yeah, that looks great. What's the price? Yeah, that looks great. It's a little extended. I would buy, sell puts on Exxon, sell naked puts, and maybe they'll come back and fill you. But I think Exxon looks great. A little bit extended, of course, but I would swap that out into Exxon. Exxon's up because of Venezuela, and I'd be careful. That's not proven. That's not a for sure thing. The other one I like is Chevron. And I mean, if you want to buy two blue chip stocks, I don't think you. I mean, I don't know much about Visa, but I'd rather own those. And then the one that kills me because it was so obvious. Oh, what am I doing wrong? Going up here. I don't want that. Do I have the wrong symbol? Did they change their name? Oh, there. Yeah, just B. Yeah, that's unbelievable. Barrick Gold is a monster. Just an absolute monster. Since May, it's gone from $18 and it's $51. It'll go to 100. It'll go to 100. Nothing goes straight up, but it'll go to 100. I like Alamis Gold. Anyway, I just don't know about, Visa. I don't know what happens in a credit pullback. So maybe ask for some research. Call your broker or just go online, try to get some research on Visa. Schlumberger is fantastic. Schlumberger is fantastic. Let me look at the year chart. Actually, wow, everything's moving. I guess this is all this Venezuela stuff, but it's also AI. It's also the need for energy. But Schlumberger is a fantastic company. Fantastic. Lunar. I don't know. Let me look that one up. I don't know that symbol. I hate to tell you. And I'm not getting oh, there, I got a chart. Damn it. I can barely read it. That looks good too. Although that's what, how many years am I looking at here? 1 year? Let me look at a 5 year. That's up. Ooh. That's had a nice move. But it's got to break through this. It's got to break through $25 with strength. And if it does, you're in good shape. But on the other hand, if it doesn't, I would say it's going to. I would say it's going to. I think those are good stocks that you have. Yeah, I've always taught to take some profits, let some run. Yes, we were taught once a stock doubles, take a third off, and if it doubles again, take another third off, and then let the rest ride. But that's back when when movements of 100% were rare, or they were a hot stock. Now everybody expects 100%, 200%, 500%. I agree with taking profits, but I don't think you should just do knee-jerk taking profits. The best training I got is you sell a stock when you have a better idea. If you don't have a better idea, don't sell the stock. Warren Buffett didn't sell stocks as soon as he had a profit. Geico, Washington Post, Coca-Cola. Well, I guess he bought Say's Candy private, but just these little rules, they're good to have in your mind. If you're in a day trading frame of mind, yes, take some money off the table. But that's what I do not see Railtown as a day trading or a trading stock. I just don't see it that way. Now, things might change, and you're right, but right now I don't see that evidence. So I don't, just to take a profit, just for the sake of taking a profit. Even the CEO of NVIDIA the other day had a story. He sold stock to buy his parents a car. That was the most expensive car in the world. Early on, he sold it. I think just taking a profit in Railtown might be the most expensive profit you ever took. But we'll see. We'll find out. Yeah, the more I look at this LUNR, it could be a double top, but on the other hand, it could be a nice breakout. And it certainly has strength. I don't know why it broke down before. 1, 2, 3. Yeah, it's a nice breakout. You'd like to see it get through 25, and then it could really have a run. And I'm not talking straight up over a period of time. It could be it could be nice. Visa at 40, oh my gosh. That's where my friend told me to buy it. I think it was 30 or 35. That's what I remember. I didn't do it. She was a top producer in London, and she built a really big position in Visa. So you're worried about taking profits because you have a huge profit. Maybe you can buy puts, or maybe you can just sell some calls. Sell short-term calls against it, bring in some premium. I don't think that thing's going, I don't know. I don't think it's going to see new highs near term, but it could by the end of the year. That's nice. Anya, I congratulate you. $40 is a great price. That's exactly what that's when my friend told me. She was right. She was right about Amazon too. And when she said it, it was against the wind. She did a lot of money flow analysis. She would do everything by who provided the money flow. I can't remember the service, but she had a good service. It's because Trump said he would cap interest rate on Visa at 10%. Yeah. I actually like that for Trump. I really do. You are obviously younger than I am, but I remember when interest rates on credit cards were capped, and I think it was $12.99, but most of them were under that. I didn't have one at that. I was a kid, but um, I still think. I think banks should I don't like Capital One at all. I knew the CFO's daughter of Capital One, and I knew a friend of mine lived in the property next to one of the top guys at Capital One. But that business model sucks, and it keeps not poverty. Debt is slavery. Debt is slavery, and credit cards keep America chained, and it's just awful. They create the money out of thin air. You know, when you use your card, that money's created out of thin air. They have to supposedly have some reserves, but they don't. And then they charge an annual fee, over limit fees, late fees, processing fee when you first apply. And then if you fall into bad credit, you could be at 35% or whatever it is. And basically, if you use a credit card, you take your family to dinner and you spend $200, maybe $300, it's a birthday celebration. By the time you pay it all back, that dinner costs you $1,400. It's just awful. And I think it's not just the interest rate, it's the fees. And Capital One is the worst. They break it down into, they'll give you credit for, I don't know, $150, $300. And they'll charge you $65 to open the account. And as soon as you start using it, the interest rate's 24 or 32, whatever the hell it is. I don't use them. It's just, I think it's usury. It's legal usury destruction. I'm all for Trump capping it, but that's very smart. That's what it is. That's kicking it. I didn't think of that. I just have listened to a couple of people talk about how the banks are reeling in credit card balances. They're just pulling them back. They're seeing signs that people are having trouble making their payments. And I think a lot of credit limits are just going to stop overnight. So it's a tough call if I don't know, if you have credit card debt and you have some cash, but you're used to using your credit card, and your bank is putting pressure on you, and you figure, well, I'll just pay down my credit card so that my credit rating looks good. You might be in a position that your bank just suddenly cuts your credit line, and you'd be better if been having left your cash balances well enough alone. There's some tough times ahead for some people. I hope it's not too bad. Taco. I don't know what you mean by that. Are you saying look that up, or are you saying? Oh, I don't know. I don't know about that one. I guess. I think the chart makes it look more dangerous than it is. Let me get a different year on there. Let me go to 5 years. It doesn't even have 5 years. I don't know. I'm not thrilled with that one. If you're asking about a stock, I don't know. Anya, so back to my area of interest. You're in love with Tony? Is he your area of interest? He doesn't own AMC. That doesn't surprise me. I don't think he owns anything, but whatever. Only buys GME when it's in demand zone, whatever that means. So he's a day trader. He's a trader. That's fine. There's a place for people to be traders, and if he's good at it, and he gets to know the pattern of how GameStop trades, that's fine. But I would submit he's probably better at it than most people here if he does it successfully. I don't know why you two don't get along. To me, I don't know him. And I don't need to be friends with him. I don't care. But the reason I'm been antagonistic is as soon as I started talking about Railtown, not only did he attack me, but he attacked the story, and he discouraged people from buying it. People could have bought that stock at 22 cents, 23 cents, 24 cents. Now it doesn't look that good because the time has gone by. But the stock went to 70 cents. I didn't appreciate it. It was an attack on me, but more importantly, it was an attack on what I might call my investors. But I'm not. I just thought it was unwarranted. And he didn't know what he was talking about, which was proven by later on. Supposedly, he owns it now. But why do you attack something you know nothing about? Ask yourself that. Why would you attack something you know nothing about? Unless your motives aren't exactly what you're letting them on to be. But anyway. I'm Anya, you made money in some of those stocks by like Visa by holding it. That's what I feel people should be doing right now with Railtown. Not day trading, not trading at all. So if he's a trader and the reason you listen to him, you like to trade, well, you've got a big enough account. You can trade a little bit without changing your life. And if you miss a trade or if you're on a flight and a small position collapses, it's just for fun anyway. But not everybody's in that situation. People are dying, they're in pain, they're trying to get their money to pay for their daughter. They lose their daughter on the operating table because they just want their money back from MMTLP. I believe Railtown is the way to make that back. And I don't appreciate somebody bringing, I think, pretty weak trading skills into something that's an investment. Anyway, that's all. Lunar broke down because they were trying to land on the moon. Sorry to laugh. It kept falling over. Okay. That probably is speculative, but at least it's interesting. And at least you don't think we didn't go to the moon. Although I don't know, how did we get through the Van Allen belts? I guess it's just a matter of degree, I guess. Taco has a different meaning. Trump always chickens out. Well, I actually think Trump is a negotiator. I don't think he wants war. And I also think the Zionists or whatever, the Israeli lobby has him by his nose. So he's trying to walk a fine line between starting World War III on behalf of a unpleasant country right now anyway. For example, I think when he bombed Iran last time, I think he did it just so he could say, hey, we took care of it. And that ended the war problem. And there's no advantage to going to war with Russia. None. Except maybe for the city of London. But we've got a break from England. We lumber around. We don't know what we're doing compared to England. But I bet these bankers do. I bet these wealthy people do in the United States. They're not really US. They're supra. But anyway, yeah, maybe you're right. Trump always chickens out. I don't think that's true. I think he's got a lot of courage. And I don't want us to go to war. So I think he's just managing what's around him and what's in front of him. I think these people are insane. What's Miriam Adelson? This country, the United States of America, made her wealthy. Well, her husband made her wealthy. What's wrong with the United States? Why isn't she happy here? She also has to have a supremacist, colonialist, religious state. No other population in the world all the Irish here should go make sure that Ireland is taking over the rest of the British Isles and go into Europe while we're at it. What the hell? I don't get it. I think he's trying to manage that well, but I think he's beholden to him. I'm talking about Zionists. I'm not talking about what everybody else leaps to. I'm anti-Zionist. And I'm anti-murdering Palestinians. But people hear that and, oh, you're right. Look, going back to wokeism, I don't like wokeism because everything's relative. I guess maybe everything is relative. Maybe there is no truth in the world. But I like the search for truth. I like that rather than trying to reach a happy medium. That's when you get confused as to what a woman is. Maybe that's what Bill Clinton was talking about. All depends on your definition of is. Maybe he was ahead of his time. All right, I'm going to sign off. I'm glad, Anya, that you have your portfolio. It's a good portfolio. All right, everybody, good night.